Infosys 1100. Okay. HDFC Life Insurance 650. Havells 800. TTK Prestige is expensive, it's 5,000. Okay. There are so many companies which are less than 1,000 rupees. Some of the greatest companies. So you don't have to buy 10,000 shares. You can buy one share.
Yes.
The only skill in life which will help you the most is managing a portfolio and your own. When I left the corporate world almost 8 years ago, at the age of 44, 45, I decided to retire from a job. In the last 8 years, probably I've made more money than I've made my entire life from my salary and bonuses, just on capital markets, because that's what I've done for 30 years.
Hey, good morning, everyone.
Good morning.
Hey, Arpit.
Mornings.
You're still in November. By March, April, you can easily build a 20-25 stock portfolio. Anyway, during COVID, you have less opportunity to spend.
So I think most of us opened our Demat account during this COVID period only. We started around
Right.
January, February, and then we are here.
Right. But then you opened it and left it on the wall like a painting, didn't use it.
No, sir, we keep tracking it. We keep changing our securities and managing the portfolio with our limited capital.
So the rule number 2 is if you buy something, at least hold it for 10 years. Because if you hold it for short term, then you're not investing, then you're trading.
Yes, sir. So
Companies
sometimes
companies don't become great overnight. They take time.
Yes, sir.
I think it's very difficult for people to call me Arpit. Or you're so used to calling people sir. I have no idea why. I'm not answering anybody who says sir to me. Yes. Yes, please. Oh, the answer to that is never. Never in your life try options and derivatives. Never. I started investing in 92, and from 92 till today, I have never done options and derivatives. Not a single one of them. Yeah, because it's exciting. It's very exciting. But I can also guarantee you that you'll lose all your money. I have met hundreds of thousands of clients, not thousands, hundreds of thousands of clients, all parts of the world. Very few, less than 0.01% make money in options and trading. You can do what you want. You will never make money in options. It's a zero-sum game. And when you buy options, when you do trading, when you do intraday, you probably make 2%, 3%, 4%. But when you buy and hold something for 10 years, you probably make 500% or 1,000% or 10,000%. So for me, options and tradings in a very crude way, it's like a daily wage worker. आज कमाया, कल नहीं कमाया. But investor is like a farmer. You plant a seed today and you reap the seeds over the next 8-10 years. You can't plant a mango seed and expect to get Alfonso mangoes in one day. You have to wait 6 years. And then the tree feeds you for the next 20.
Sir, can we now start the session?
I am here.
Yes. So I would like to call Meghna and Aminder to take the stage further.
A very good morning, ladies and gentlemen present here. Ladies and gentlemen, on behalf of Department of Finance and Business Economics, I'm your host for the session. I would like to extend a hearty welcome to each one of you coming this morning and welcome you all on the second day of 33rd Annual Convention. We thank you all for taking time out of your busy schedule and joining us for the event. Let's start the morning with a co-host giving you a brief summary of yesterday's event.
On the previous day, we had 3 sessions. First, the FinTech Techathon, where shortlisted participants presented their startup ideas to a panel of judges. Then, we had a fireside chat on role of technology and wealth management and insurance, where experts shared their years of experience and struggle about their. We also conducted a fireside chat on role of technology in real estate, where we learned from the people in the industry about PropTech, with the challenges faced by the sector and international market view on the real estate business.
Now, let me give you a gist of today's event. We have 2 technical sessions on topics Future of FinTech and Future of Business Analytics. It is followed by a plenary session. Finally, at the end of the day, we have a session on entrepreneur opportunities and challenges.
I request you all to be seated and kindly switch off your mics. Ladies and gentlemen, we will now begin with our first panel discussion. In the first session, we discuss the future of FinTech.
The term FinTech refers to a synergy between the finance and technology, which is used to enhance business operations and delivery of financial services. FinTech can take the form of a software, a service, or a business that provides technologically advanced ways to make financial processes more efficient by disrupting traditional methods.
Some of the most prominent applications on FinTech are mobile payments, automated investment apps, cryptocurrency, online lending businesses, and crowdfunding platforms.
At DFBE, we strive for excellence, and therefore, it is a privilege to host a panel of industry experts that deal with FinTech and its future application.
The panel for the session will be moderated by Mr. Vinod Kashyap, who is the co-founder and director of NextGen Solution Private Limited. Mr. Vinod graduated with honors from University of Rajasthan, and he is also a chartered accountant. He holds multiple positions as an UN CFET expert, convener of Bureau of Indian Standards, member of the Associate Chambers of Commerce and Industries, member of the Board of Advisor of MIT College of Business, MIT ADD University. He has over 30 years of quantifiable experience in industry and professional working. We welcome you, sir, and thank you for being part of our panel discussion. As a token of our gratitude, we present you with the tree planted in your name.
Our panel consists of Mr. Kumar Kaushal, Global CTO, Tiller Capital. Kumar Kaushal is a business and technology architect, having a passion for creating scalable technology businesses. He has corporate experience as a CTO for Reliance Jio from 2011 to 2017, responsible for digital banking, payments, fintech products. He possesses expertise in decentralized financial processing, blockchain-based financial services, and many more tech-based business operation. We welcome you, sir. Thank you, sir, for taking time out of your busy schedule. We have planted a tree in your name as a token of gratitude.
We also have with us Mr. Harsh Gupta, Vice President of Razorpay. He has done his BA from Thapar Institute and MBA from IIM Lucknow. He is currently working as Head of Enterprise Accounts and Partnership at Razorpay. Previously, he was Head of Enterprise Accounts at PayU. He has an experience of over 5 years in fintech space. We welcome you, sir. Thank you for taking time out of your busy schedule and agreeing to be part of the discussion. Please
Thanks,
accept
everyone.
a tree planted in your name as a token of our gratitude.
We have also with us Mr. Arpit Agarwal, founder and director, Kelp Decoding Investments. Arpit is an alumnus from the batch of 1991. He has close to 3 decades of capital markets and banking experience, has successfully built greenfield and sizable private banking businesses for DSP Merrill Lynch, BNP Paribas, and ICICI Bank in India. He set up a financial services businesses for Danaday AV Group in India, a joint venture with partners in the UK, and the business was successfully sold to a US private equity firm. He also held the position of CEO of the wealth management business of Bajaj Finserv. He now has his own venture and knowledge help app called Kelp. We welcome you, sir, and thank you for taking time out of your busy schedule. Please accept a tree planted in your name as a token of gratitude. Now I would request Mr. Vinod Kashyap, our moderator, to start with the panel discussion.
Morning, everyone.
Good morning, sir.
Good morning, sir.
Good morning, sir.
The structure of this panel discussion is like first, each of the panelist speakers will share a few thoughts on their industry, and then we'll have a Q&A session. And audience can also ask some questions. So I would like to invite Mr. Kumar Kushal first to share a few thoughts on banking. Mr. Kumar?
Yes, Vinod. I think I need to share my desktop. I don't see an option here. Can you enable that, please?
Yes, sir. So there's an option of sharing the screen.
Kumar, it's enabled.
Sir, I have enabled it. Can you please check
At
it?
the bottom.
Just a second. Where is the option? It's in more.
No, sir. It's a green button right in between the screen, share screen. It says share screen right in the center, bottom of the screen. You can also press Alt plus S to share the screen in case you are not finding the button.
Yeah, I did. Can you see this? Can you see the screen?
Yes.
Yes, sir, we can see your screen.
Okay, great. Good morning, everyone. My name is Kumar Kushal. I manage a private equity firm technology portfolio in the US, based out of New York. Right now, I'm in Bangalore, working from my home because of COVID. We all have the opportunity to work from home. So it's a very interesting time. I will just go through first what fintech is. I heard one of you explaining what fintech is. In a nutshell, if you really look at and read this particular slide, you can very easily see the scope of fintech. The fintech is a combination of technology enables financial services, which captures payment, banking, and then the objective of fintech today is actually delivering personalized financial services. And you can actually see there is investment, there is lending, corporate banking. There's a lot of different fields coming to the play. And in our life, fintech essentially touches us when we go pay for something we buy in a shop, or buy something online, or buy something on mobile phone. So that's basically what fintech is. And where fintech is going in the future is very interesting. It's all going to merge into our mobile devices and wearables. And slowly, fintech is going to do all the financial services, using social media and conversational UI in the future. Everybody has used some form of mobile payments, mobile banking applications, net banking, but today there's a transformation happening where you don't have to go into a mobile banking application and try to search for options, where to transfer money, where to get my balance, where to get my bank statements. We can go to a social media like application like Facebook or WhatsApp, or even go to something called Alexa, which is not very popular in India, but if you go to any household in US, any middle class, upper middle class, you can actually see this Alexa or Google Home, where you can just talk to your home or talk to your computer, and you can actually give voice commands. For example, in a Alexa-enabled mobile banking, I can just ask, what's my balance? In Bank of America, it'll give you a reply. And the backend infrastructure for facilitating this is very interesting. Obviously, there is security here. There are tokens, identity tokens in the phone, which will go do a single sign-on your mobile banking app, and then get you the balance. All happens in milliseconds, and you get the balance right away. And you don't have to go search for very complicated software with so many options to find what you need. The beauty of this kind of a situation is you can do pretty much anything using these kind of open banking APIs. Consumer life becomes very easy. I really am a big proponent of voice commerce. And if you really look at startups in the US, very interestingly, the most successful fintech startups in the last 3-4 years is called a company called Stripe. I mean, any of you can guess the founder's age? It's actually less than most of us on this call. 19 and 21, two founders started Stripe 5 years ago, and today the valuation of their company is $20 billion. So I'm saying any of you can start a fintech company. What the skill you need is really the ability to understand AI, ability to understand financial services, ability to understand technology, and ability to code. And coding, we are looking at Python, we are looking at Java kind of interfaces. Any of you can start a really scalable fintech company in any of the spaces I displayed on the previous screen. My topic is basically next generation banking. So I'll just go. I mean, this slide kind of summarizes all the features in the banking applications you're going to see in the next 2-3 years. You can really look at voice commerce. Again, voice commerce is very simple. Everybody has used Amazon application, right? You have used Flipkart. But if you really look at voice commerce, it's very simple. I can just say, Amazon, can you buy me a tire, 255/55/168/109, and it'll automatically pop up all the tires available. Imagine that on your computer screen or your mobile phone. You don't have to do anything. You don't have to go search for where the tire is or where the food product you're going to buy. Voice commerce is going to really revolutionize payments and commerce. For example, there is a dash button in the US. All I need to do is, it's on my refrigerator, and if I just push the button, 2 days later or even 24 hours later on my doorsteps, they will deliver the grocery which I already programmed the button for, which will be my cereal, my milk. And there is no communication, there is no mobile application, there is no payment, everything is fully automated, pre-authorized. All I need to do is whenever I want to go buy washing, powder for my dishwasher or my washing machine, all I have to do is push a button which is set on the washing machine. Next day morning, I have my detergent available on my doorstep. That is basically where the commerce is going to go, is just a push of a button, or you have to just click on your mobile phone or talk to Alexa and say, please order my groceries for tomorrow. You already have a preset account with what you're normally buying there. And if you want to add something, you can just say, add, cheese cubes to it. That's it. That's how the commerce is working today. And the biggest challenge for a fintech company is actually onboarding customers. So there's something called eKYC, and now eKYC on blockchain is becoming a very big hit. The key about eKYC is if I want to open a bank account, in India today, if I go to an SBI, I need a photograph, I need an identity proof with an address proof, I need an Aadhaar card. There's so many things which are needed. But in a mobile application, if you have a DigiLocker app, you have created a copy of your Aadhaar card, and you have a copy of your photograph, and you have a copy of your residence document, driving license available. Again, in this particular case, you have a small database, which is again, locked cryptographically with encryption and everything. And I can just click on a button on my phone or say that, please send my KYC documents to the bank, and the process is done. And I can just go open a mobile app. I think one of the best applications I've seen is there's an application in Dubai called Live from Emirates NBD. You can just open a bank account even without going anywhere. I can just scan my Emirates ID, I can scan my passport, and boom, that's it. The bank account is open. Day before yesterday, my younger daughter, she's a US citizen, and she just wanted a bank account in US. It took me 2 minutes to open a bank account in a bank called Chime. And this bank didn't exist before. It's impossible to open a bank account in Bank of America, but on Chime, all I need is just 2 minutes. I have a bank account open, and the virtual debit card came on the mobile phone application. Extremely simple process. That's eKYC, and that's really what it takes to do banking today. And if you really look at mobile loans, it's very interesting. In the US, the loans are actually created by the bank and pushed to consumers. For example, a person whose bank account is really low, at the end of the month, are you able to hear? Some echo is coming actually. Am I audible?
Yes, sir, you are audible.
Okay. So when somebody applies for a loan, the bank can actually look at his credit rating, look at his banking habits, and you can actually give him a loan. If the bank knows you have a paycheck coming at the end of the day, in fact, most of the next generation banks like N26, their revenue models are tied to the short-term loans they give to customers. In fact, most of their revenues, in fact, there is no revenues in payments. So if you really look at these banks, they are giving a loan on the 25th of the month against the paycheck, which is coming on 1st or 2nd or 3rd of the month. They are easily making 10% return in a week's time. Now, sometimes as low as 1 or 2%, but imagine the value of money the bank can create by just giving even a loan at 1% or 2% or 3% for 5 days. And if you keep giving that kind of loans, imagine the amount of money the bank can make in a very short time. And this is very innovative. And in fact, I have seen applications where people walk into a grocery store and an SMS comes to your phone or your application saying, oh, I can offer you $100 loan for this particular shopping. And that's how fintech and next generation banking is going to work. Basically, they have a complete profile of ours and our financial needs, our investment needs, what we need to do in the future. So these kind of applications are enabling banking in a very, very different way. If you really look at a company we work with very closely called Renaissance Technologies in New York, they are a very interesting fintech. It's one of them. I say we consider them as the most advanced AI company in the world. In fact, they have been consistently returning 30 to 60% yearly for the last 30 years. It's completely using algorithm. And again, it's again capital markets, it's again stock markets. And they have optimally found a way of returning consistently 40 to 60% return to customers. In fact, that's how it's going to be. And if you really look at how this is happening, you have an application, right? But the challenge is the applications, like for example, watching a movie like Netflix or buying something from Amazon or from any of those e-commerce sites, the banking is going to be embedded in this application in the future. You won't even see it. When you click on payment, that's the only time banking is going to be enabled. So banking applications slowly will go away, and lending and commerce applications will take space in our phone. And through the application, we can actually make payments and transfers and remittance, and everything can happen. And in fact, I see a world where you and I can sit here in 5 minutes. I can open a bank account in New York Stock Exchange and start trading or buying shares in New York, which we can't do. And there's about 2 or 3 startups in India who are facilitating that right now. Imagine the type of AUM, and the transaction volume these companies can actually create. So we can sit in India and invest in any stock market in the world. That's where banking is going. And if you really look at the chatbots, in fact, digital banking is going to be based on chatbots, because you don't have to really go and look through a complicated menu options to find out. Today, if I want to do some trading on HDFC, I have to know my user ID password. I have to log in. Then I have to find how to do trading. It's a pain to go buy a stock. Imagine having a chatbot. All I have to say is buy Reliance share today at market. That's it. The trading happens, and all the authentication, everything is pre-done, everything is pre-programmed, and how easy it is. And then you can just voice authenticate. Voice biometrics is going to be one of the biggest use cases with a lot of technology working. In fact, how it really works is everything is tokenized. My identity is tokenized. It's sitting in a secure area in my phone. So the phone will pull this identity and send it to the exchange to do the trading. Authentication comes through OTP, which can be through SMS. My app will automatically read the OTP and make the transaction happen. I really don't have to do anything except maybe show my face in front of the camera or say the keywords which are there to make the trade happen. It can be very simple conversational UI based on voice messaging, and things happens. And if you really look at from a corporate point of view, or even from a personalized point of view, the type of reporting we need, all you have to do is just ask a question, you get answer as a report, comprehensively answering our answers. That's where banking is going. And all these infrastructure, blockchain, all those things become an underlying architecture of the technology platform, which will enable this. And mobile wallets will slowly go away, and you're going to do conversational banking through WhatsApp or Facebook. That's where it's going, and payments going to be fully digital. And really, how all this can happen is through an open banking platform with multiple channels enabled, with APIs available for programmers and vendors to create services. For example, today, most of the life insurance is sold through, I bought my health insurance through HDFC Bank app. And that's the best policy I could ever do. In fact, I don't need to go to an insurance agent. My bank is actually going to enable all the financial transactions I need, including my investments, including life insurance, health insurance. Everything is going to come through these mobile banking applications. So slowly banks are transforming. And if you really look at technologically, I just want to say there is going to be an AI engine, which is going to be the core of the banking application. And all the application around that I shown in this circle will actually work. I just put what's in it for the consumer on the left side and what's in it for the bank on the right side. So from the banking point of view, there's a lot of advantages. You can create the best business to business and business to consumer marketplace. And you can make everything available from a single point application from a bank to the consumer. And from the consumer point of view, banking is available 24/7. We can do pretty much anything, including international remittance, payments to our loved ones instantaneously, any point of time. Today, I can transfer bank through my live, Emirates NBD application in Dubai. Instantaneously, money comes to my SBA or HDFC account instantaneously at the best possible exchange rate. I don't need to talk to anybody. It's just a very simple application. Just log in, sign in, and then just authenticate using an OTP coming to me, and the payment is done. Within seconds, money is in my Indian bank account. That's how banking and fintech has revolutionized. It used to take somebody to go to an exchange, somebody to do, it has to be physically present in the foreign country to actually transfer. Now, all that is gone. So that's basically how we are revolutionizing payments and banking. What is the objective of this new age banking, if you can see? just like everybody can guess, we can do anything, anywhere, sitting in our car, sitting in a flight, sitting in a hotel, everything we need to do. So this is where the entire banking is mobilized and it's on the cloud native application, including lending, including KYC, everything can be done where we are sitting. I would really encourage you guys to ask questions so we can actually have an interactive session instead of me just going on a monologue. I know it's 15 minutes. I think it's a collaborative discussion. Please stop me and ask questions, and I allow an interactive session. Whatever little I know, I can really answer these questions. So anybody has any questions so far?
Sir, you were talking about, hello sir, my name is Himanshu Rajoria. I'm from Department of Financial Studies. I wanted to ask you, you were saying that the new fintech technologies has been revolutionizing the industry, but that has been in the steps of providing help to people who are already in the banking sector. How can we help people who are not connected even to the earlier traditional banking sector, because people are still not connected to that level of work? How can we help them by fintech?
No, in fact, what I see is the financial inclusion is one of the largest area of fintech revolution. So today there are so many projects which, when I was at Reliance, I was personally participating. We have done a lot of POCs where, simple SMS based payments. If you really see M-Paisa in Kenya, that is one use case which really works. Everything is through SMS. There is no mobile application. There is nothing. Any simple person with a bank through an SMS interface can get to your bank. Basically you have a number. All you need is a bank phone number, and then you can just start SMSing. So you don't need to go and log into a Alexa or log into a application like Facebook or WhatsApp or anything like that. I can have a small candy phone with a 1-inch screen, and I can just text type saying what is my balance. All I need to, just like I said in SMS, see, that's the only skill set a poor farmer or an uneducated person need to do. And obviously using local language is a bit challenging. They need to have a little bit of at least ABCD and pay and keywords they need to know. That was a big challenge in Kenya, but people when they are put to this kind of a situation, even a shopkeeper or anybody who doesn't even know English will learn saying, pay Abdul. That's all they have to do. And he'll ask you how much. You'll say 100 rupees or whatever the currency in that country is, and he'll say, sorry, your balance is 97. Then you say, okay, 70. It's a conversational UI on SMS. And that has been deployed very actively. I can give you use cases. There's a company called Tala. It's one of my favorite use cases. There's a lady named, there's an Indian Gujarati girl started this fintech in Kenya again, and in Philippines. All she does is give loans to people. And the way she gives loans is also very innovative. All you have to do is open a mobile app or IVR. You just call a number, a robotic voice will come using IVR. Can I help you? In their local language. And all they have to say is, I want to apply for a loan. What they do is they ask 20 questions. And these questions are as silly as, you find a $10 note on the road, what you do? And you'll get a choice. Number one, I will go talk to a police officer, or I will keep it and I will use it for charity. The options are so simple and easy to use. After answering 20 questions, the system will use AI-enabled services to model their personality and their integrity and ethical behavior and several things, and give them a $5 loan. $5 is a lot of money in a place like Kenya. And the beauty of it is they have given $300 million worth of loan using this technique, and their NPA is less than 2%. And their basically the return on investment is 8 to 10% a year, and NPA is 2%. So they have net without any human interaction, giving it to total strangers. And in fact, everybody know Tala in these countries. In fact, Tala has got PayPal investment of 120 million to do this in India. So they are working on doing the same thing in India. So the technology and AI is really, really going to revolutionize the way common man do banking and financial inclusion as we know it.
Thank you.
Hello, sir.
Yeah, please go ahead.
Sir, we have a dedicated Q&A session after the discussion where everyone will ask their question.
Yeah, sure. Okay, I'll just continue with the few more slides and then we can go into discussion and other presentations. So really, if you look at what is the purpose of this entire digital banking initiative, it's about digital transformation. You know, the difference is when I go to a mobile banking application like Paytm or Razorpay, it is basically one application which everybody get the same, you know. Where AI comes in is when that application kind of reconfigures itself based on individual customer's personality. So it's really not one size fits all. The application will be very much customized for you. You know, if my habit is using voice commerce will be enabled. You know, if I do investments and they know my requirements, like, you know, where I invest and what I buy, that's what my application will be very customized for me. And the UI and the way answers are given to me from, you know, it's not going to be a standard algorithm which is going to really get me the answers from a conversational UI. It'll be something very specific to me, and they will have a profile of me, and they will really customize everything. You know, that's basically the only way digital transformation happens. In fact, that's what I call personalized, highly personalized. Everything is going to be highly personalized. So it really depends on what a person is looking for in that particular period of life. Even investment offering, the robotic advisor will give you based on your financial situation, just like Arpit was saying, you know, invest 1,000 rupees in a stock. So if a student is logging in, or imagine you getting 10 options from a robotic advisor saying, oh, today this particular share is down, and I think this is a time to enter the share. Why don't you invest the 1,000 rupees sitting in your 10,000 rupee account into this particular share? And that will make you, you know, do this transaction much faster. And essentially, there are no fees for these transactions. You know, there is no, I think, you know, companies have revolutionized, and trading is literally almost for free with Robinhood kind of applications. So hundreds of things fintech companies can actually do. You can actually start up a fintech company with any kind of personalized service going to consumers, and you can become extremely successful. All you have to do is make whatever you do as simple as possible for the consumer, and the consumer will adopt it. And really, just from a background perspective, this was the project which I worked on for 7 years, from 2011 to 2017, where this is kind of, I would say, the largest fintech project in the world, really. Reliance have really acquired, you know, just from a telecom perspective, there is more than 5 lakh agents accepting Jio. So there is, you know, 5 lakh merchants, and right now, you know, almost crossing 400 million customers, you know, paying for various services. And there is a JioMart, which is coming, which is a merchant commerce application where small shops can buy things. So this whole thing is fully integrated. There is a huge vendor ecosystem which was put together, and it's almost 5 years to pull this whole system together, and they're systematically releasing each of these capabilities slowly and steadily to the marketplace. And really, the purpose of all these fintech applications is really consumer profiling, and each fintech company's primary job is to acquire customers, create a profile of the customers without violating privacy laws based on each country, and, you know, giving certain services. It doesn't matter whether you're Swiggy or you know, a Robinhood giving you stock market application. It's about customized, personalized services given to consumers, which actually make these fintech companies successful. Just from a financial point of view, this is my last slide, just to show you. I told you Stripe is $20 billion in valuation. If you really look at, this is the mobile wallet transactions worldwide is $1 trillion. It's actually crossed $2 trillion recently. And just to see the credit card transactions, the amount of money available is enormous. So if you really look at a company like Alipay or Alibaba in China, their financial transaction volumes are over $50 trillion right now. And if you really look at lending space in the US today, the P2B lending, just person-to-person lending, that's not even banks lending. You know, you and I can lend to an American citizen if you have money in the US bank account, and that is 160 billion. So imagine that's the size of a mid-sized bank. So if you really look at NPCI is doing trillions of dollars worth of transaction. You know, RTGS in our country has crossed $10 trillion. And Google Pay from nowhere has come in 2 to 3 years, a $120 billion transaction processing entity. And, you know, Paytm is 60 billion. PhonePe has grown to be a $93 billion company. And BillDesk, which does most of our bill payments, is about 65 billion in transaction. And Indian economy is 3 trillion, but our purchasing parity is over 20 trillion. And now I think any questions to me you can ask here, or we can go to the next presentation.
Sir, sorry for interruptions. We have a Q&A session in the end.
Oh, sure, we can go to the next presentation and then we can do the Q&A.
Hello, Vinod sir. Sir, you are on mute.
Hello.
Yes, sir, you can start the discussion.
Yeah. Thank you, Mr. Kumar. Now I would like to invite Mr. Arpit Agarwal to share a few thoughts on capital markets.
Okay, so Kumar, you want to stop sharing your screen?
Yeah, just a second.
Yes. Okay, so I don't have a presentation. I'll just talk. and Kumar gave me some ideas on some of the things that he mentioned. Thanks, Kumar, for that. I'm going to harness some of those stuff that you mentioned because it's part of my thought process. So I'm going to largely restrict to capital markets in India. And then I can use some examples from capital markets across and see how things will come. Where I'm coming from is fintech. I look at it from two perspectives. One is improving things that are done, existing things can be done better. And a lot of that Kumar summed up in his first slide. Okay, what is fintech? You saw all of that. Okay, that is a classic summary. I hope each one of you get a screenshot of that. That is how you improve the process. And his example of buying the insurance policy from the mobile app of HDFC Bank was one of those classic examples that you can buy stuff. So that process is simplified. And largely what we've seen till now in the capital market space, and I'm not getting into banking right now, I'm getting into capital markets alone, is iteration of the existing processes into more efficient ones. And the iterations are around the products, and the iterations are around the channels. So if you look at banking, an ATM was taking the bank outside the physical building, and online was taking it universal 24/7. Now bring this to the capital markets. Over the last 400 odd years, if I remember correctly, the first stock exchange in the world was Amsterdam Stock Exchange in 1611. There are a lot of technological advances which have changed capital markets. The first one was the telegraph in the early 1800s. The next one was the stock ticker. The third one was the telephone. They were all in 1800s. And then it took 100 years for the computers to come, which was 1960. And stock exchanges actually went digital in the 1980s. NASDAQ was the first one in 1971, but largely all stock exchanges in the world got digitized in around 1980s. In fact, New York Stock Exchange still had an open outcry system as late as 2014. Now, what did all this do? All these technological innovations do? They made the stock markets cheaper. Okay. They made them faster. They made them more integrated, and Kushal covered that you can sit here and buy a stock anywhere in the world subject to exchange control regulations and processes. So cheaper, faster, more integrated led to increase in liquidity. Okay. A whole lot of people could now participate in the stock market, and you can sit in your house and buy and spend 194 rupees and buy 1 share of ITC. When I started my stockbroking career in 1991, there were minimum tradable lots. So you could trade on a minimum of 100 shares or a minimum of 50 shares. Okay. When everything went digital, it became 1 share. Globally, you can even buy fractional shares. Okay. So you don't even have to buy 1 share. There are companies which offer you fractional shares. So a classic example of a company like Berkshire Hathaway, which is the most expensive stock in the world, where a single stock trades in a few crores of rupees. Okay. Imagine if you start doing fractional trading of Berkshire Hathaway, so you can buy worth $1. So cheaper is now the cheapest. Okay. Charles Schwab launched online broking in 1994, but everybody in the world is talking about Robinhood, which is now valued, so I don't know what, Kushal, it must be valued at what, 11, 12 billion dollars? And Charles Schwab is valued at less than 100 billion. You've seen what Zerodha has done in India. In less than a decade, they are larger than the number 2 and number 3. So they have over 17% share of the Indian stock market, and they still have only 27, 28 lakh investors. So if I take the population of this country and I see the number of unique people who invest in stock markets or capital markets, whether it's through mutual funds or through direct equity, I don't think I'll reach a number of 5 crores. So all of this stuff tells me that the real fintech revolution or the real fintech disruption in the capital markets has not even happened. Technology has not even touched capital markets in a way to make it our way of life. Okay. So all of the examples that Kushal mentioned, you can press a button and you can put that across. You can just Google it and see all of this. What Amazon has done, Amazon has become a way of life. It's become a way of life. It's no longer a channel, it's a way of life. And look at some of the disruptions that happened when you moved from the horse to the car. That was early 1900s. People didn't think, oh, I got to make a faster horse. Or how do I make a bigger horse that can carry more people, or a horse who shits less? Because there was a whole industry of people who cleaned shit, the horse shit, during the night. Okay. They said we'll create a new way of transportation. And that led to a whole lot of industries, infrastructure, roads, petrochemicals. All of that came because you moved from the horse to the car. What did Apple do? It created a smartphone. So the car was innovation. The car was innovation. What Apple did was integration. It took a phone, it took a touch screen, it took internet access, it took open architecture, global apps, okay, and it put all of that together in one device, and even put a camera in it. So most people don't buy DSLRs anymore because, you know, your latest iPhone is better than any DSLR that is available. So that's integration. So there's innovation that leads to disruption, there is integration that leads to disruption, and there is disintermediation which leads to disruption. Amazon is a classic example, took the product directly from the manufacturer to the end user. That's disintermediation. Now, when you start applying this to capital markets, and banking is connected to capital markets, and regulations are connected to capital markets, it's the cheapest, it's probably the fastest, it is fully integrated, subject to exchange control regulations. So where do you go from here? You can't make it any cheaper. You can't make it any faster. Okay. You can't do anything else. You have to innovate. To grow, you have to innovate. And where does innovation, whether it's through iteration of existing process or using the first principle theory, saying, I'm going to throw away everything outside the window and I'm going to start from scratch. A classic example, which I wrote down, which is Chime versus Bank of America, which Kushal mentioned, is if Chime can open an account in 2 minutes, why doesn't Bank of America do it? It's not that Chime is doing anything illegal. If Zerodha can open an account online digitally in a matter of minutes, why is it that the others can't? Okay. They're not doing anything illegal. They're within the law, they're operating within the regulatory system, and yet they can innovate and do things differently, is because most disruptions happen from the outside. So Tesla came and disrupted the internal combustion engine. Okay. Apple and Google came and disrupted the mobile phone. And again, the last slide, which Kushal showed, if you see, it said Ant Financial has 90% share in the Chinese money movement market. So the banking industry was disrupted by Jack Ma in less than a decade. And in China today, due to Ant Financial, banks have lost their primary relationship with their customers. The customer doesn't even need to go to the bank to transfer money or to use. Bank traditionally is a storehouse of value. It stores your value. Okay. I have not visited a bank branch in 10 years. The only thing I use my bank for is to transfer money. Okay. And Jack Ma disrupted it. So all of the stuff is already done. Amazon is the epitome of hyper-personalization. You remember the last slide of Kushal? Okay. Hyper-personalization. So if I log into my Amazon screen and you log into your Amazon screen, we'll see completely different things. Now look at it in our capital markets. So where do we go? So all of the stuff has already happened, and the time is right for someone to come and innovate and disrupt or either improve things that we do significantly, improve significantly the things that we do, or disrupt it the way we do it. Because true disruption happens when somebody introduces a product or service where everybody, the user as well as the industry, is forced to look at it differently and change their behavior. So if I log into my stockbroking account and see an interesting statement with my capital gains, it is not innovation, it is improvement of the process of reporting my transactions. But I've had broking accounts with 2 of the top 3 bank-owned stockbrokers in the country, one for 18 years, one for 12 years. I have never done an intraday trade in my life. I have never done a futures and options trade in my life. And yet every day I get 5 SMSs for intraday trade calls or speculative ideas. I'm not a speculator. I can't call. So voice-based stuff doesn't exist. Okay. So I can't say, hey Alexa, tell me how many stocks are there in the NSE 50 which are trading at less than 40 PE on a price to book of less than 3. I have to do it manually. Okay. So if I move very quickly, and we'll do the rest during the Q&A, in my view, what are the 3 or 4 major changes that I see coming in the next few years? We need to create a platform, or somebody needs to create a platform which doesn't make my transactions more efficient, or which doesn't make my reporting more efficient, but a platform which helps me save, a platform which integrates in my life and helps me to become financially healthy. Okay, Now, if you Google, you'll find an app called Moven, M-O-V-E-N, Moven, which has been started by a guy called Brett King, who I met 15 years ago. They started this 10 years ago. By now, they know which day of the week, which minute of the week, which minute of the day you have the highest probability of saving money. You can ask it that this weekend, do I have money to go and have dinner? And I want to spend $200 on dinner. Do I have enough money to do it? And it calculates everything and tells you, it's all right to have 200, but you'll have to cut $50 next week. We would recommend you go and have a $150 dinner based on your financial profile. Okay. So there is stuff that is happening, but what are the 3 or 4 changes that I see happening going forward? And this is the need of the day. So online KYC is part of our lives now. And COVID has fast-tracked a lot of these, okay? Because both the players as well as the regulators have felt the need of doing things digitally. And COVID has really fast-tracked a lot of those. One, I see regulations being built inside the apps. Okay, so I'll give you an example. Today, when you go to open an account, a trading account or a broking account, they do risk profiling, yes? Am I correct? You have to fill a risk profiling form because it is mandatory. Now imagine, just Google it, whether it's any global investment bank or Indian stockbroking house, just download their risk profiling form, and everybody has their own set of risk profiling forms. And a lot of them will do their risk profile today. So my risk profiling was done 12 years ago by one of them, and 18 years ago by another one of them. Now I'm 52 years old. So don't you think my risk profile has changed? Okay. But today I can upload, so there are enough apps which take your PAN number and upload your NSDL cash statement, which gives them the full history of your current portfolio and the past transactions. And if somebody looks at my past transactions for the last 15 years, they'll know through algorithm, they'll figure out what is my risk profile. And my risk profile is dynamic. So if I was buying stock at the end of March, when the whole world was saying that this world will collapse and the stock market will go, and the stock BSE Sensex will go to 15,000, and I felt otherwise, and I thought I was like a kid in a toy store with limited amount of money and unlimited amount of toys, stocks available at ridiculously cheap prices. For me, the decision was very difficult because I didn't know what to buy because everything was cheap. But if somebody was selling in panic, exactly what Kushal mentioned, 20 questions to figure out what my profile is, you can just look at my transaction behavior and create a dynamic digital profile, which is more effective than a dumb form. Okay, so that's where AI comes in. The other thing is risk management. There is a very formal insider trading regulation in our country, where people say, if you are in possession of unpublished sensitive financial information, and if you do trades on that, you're considered an insider. And not only me, my whole family is included as an insider, because if my father is doing the trade, I could have told him, I can't do it, you do it. It's very easy to digitally map all the PAN numbers of everyone who is considered an insider in my family and tag it to my account and say, if during this period, the company has a board meeting and Arpit is the CEO of the company, he is under no trading period, he's under trading black log, okay? Anybody in his family trades during this period, we flag it off as a red flag, maybe he's tipped them off. So regulations start getting into the transaction platforms, and therefore monitoring becomes a lot easier. The second, which is also part of Kushal's slide, is robo-advisory. Okay, so we've digitized our transaction engines, we've digitized our settlements. So if I send you money, it comes to you through IMPS, not even RTGS or NEFT, through IMPS up to 2 lakhs instantly. Your Google Pays and your Paytms and all of this gives you money in a few seconds. Okay, your bank account. Why can't your bank account be replaced by your investment account? Just the way Jack Ma's done in China. Why can't my salary, instead of going to my bank account, go to my money market fund? Why can't my EMIs, my payment gateways, all of them be linked to my investment account? Why do I need a bank account at all? Okay. Why should settlement, so you must have read yesterday, SEBI is proposing to do a T+1 coming T+1 from T+2. Why can't settlements in today's digital world be instantaneous? I sell Reliance share on the stock exchange and I get the money instantly. Technology makes it possible. The infrastructure and the regulation has to be changed around it. And then I can link my investment account to Harsh's Razorpay account and I can make my payments instantly. I say, I need to buy a fridge. I have no money, no liquid money. I need to buy a fridge. Okay. And before the fridge gets delivered, my money market account gets sold to the extent of the value of the fridge and the money gets released to the vendor. Okay. That is the need of the day in terms of innovation. Voice-based, I've already discussed. Smart RMs. As early as 2017, if you Google, you'll find robo-advisory models are already beating human advisors. Why is that? Because a computer can process and analyze a lot more information much faster than a human being can. So for retail, mass affluent, in the next 4, 5, 6 years, relationship managers won't exist. AI will take over. For the ultra high net worth, which have family offices, the family office money managers will find very hard to compete with robo-advisors. Because in the end, it's all about IRR. What is the return on my portfolio? Okay. So it's not about service, because service is commoditized. Service is digital. The only thing that matters to me is what is my IRR on my portfolio, commensurate to the risk that I'm willing to take. Okay. Lastly, what will happen is that the analyst, okay, now this is the long shot, but I'm assuming, or I'm saying it may happen. The analyst or the economist will disappear because AI and computers will take over. As early as 1997, there was an IBM computer, I don't remember the name, it beat Garry Kasparov. 97, okay? Last year, this time in November, as we are talking, there was a game called Go, right? And there's a guy called Lee Sedol, isn't it? Lee Sedol, who was the world's best Go player. And the computer beat him. And he said, I'm retiring because I can be number one, but there's still somebody better than me. Because all that computer did was put 100,000 Go games, iterated it, and played with itself again and again, and became so smart that he could beat the best player in the world. You can Google and find, in the US, computers are beating lawyers. Computers are beating doctors in diagnostics. There was a test done last year sometime where 20 of the best lawyers were given a document to read. They took 92 minutes to read it. The computer read it in 26 seconds. And the computer had a 94% accuracy rate. And the lawyers, those 20 lawyers, the best guy had an 85 or 86% accuracy rate. So humans can't compete with computers when it comes to AI, sheer computing power. So all of these things will have to come into capital markets. Amazon has given an example of consumer hyper-personalization. Jack Ma has given the example of disintermediation of banks from investments. Okay, and there are enough and more examples. And India is probably the right time. It's the right time for all of these to converge to capital markets and bring capital markets to the average person to say that each college student, before I open a bank account, I want to open an investment account. Because the bank account is going to give me a ridiculous 3%, which is half of inflation. If I put money in a fixed deposit, it's going to give me 5%. which is less than inflation. So I need to find a way to beat inflation and create wealth. And wealth creation can only happen through equities. Okay, so that's enough from me from my side. We'll take the questions. And over to you, Harsh. Sorry, Vinod.
Thank you, Mr. Arpit. And now I'll invite Mr. Harsh Gupta to share a few thoughts on payment industry.
Sure. Thank you, Vinod. Thanks, Arpit. Thanks, Kushal. I think really insightful presentations from your end. I think I'm going to talk about some of the ideas that you guys already talked about and try to add to that in terms of what are the key trends, at least 3 large level trends that at least I could see in the Indian fintech industry. And then talk also about what are the opportunities that are there along with those trends. Right? So I think the first big trend, and I think Arpit and Kushal already talked about, is unbundling of banking services. What a traditional bank used to do has changed significantly with the new age players. So I'm going to expand on that. Second is disruption of how a business does function in the country right now. Right? How a business was functioning few years back and how it functions right now in terms of money movement and everything, how it has changed the entire ecosystem. And then third, I am going to talk about a larger topic, which is around digital economy, how it is continuing to grow. And also at the same time, it is going to get regulated significantly. Like Arpit talked about in the capital markets, the PAN numbers can be mapped to the individual, and that individual can be barred from trading at certain point in time, right? During a board meeting or something like that, right? So let me start with the first trend, right? So here you see the website of an American bank, right? And you look at it, the kind of services this bank offers. So for example, it offers credit cards, right? Or receivables cards, or loans, or mortgage, and all of these services, right? So this is what a traditional bank does. If you look at it, for each of these individual services, there is a new age fintech player that has come into play, which has tried to disrupt each of those services by either, improving the existing set of processes or providing significant value add to that, like Arpit was also talking about, right? So for each of these individual banking services, now there is a new age player offering that service in a much better way, right? Now coming to the Indian context, we are seeing similar trend in the Indian industry as well. This is the entire fintech landscape if you look at it, right? The first one is banking, of course, mobile banking, core banking services, risk management, everything. So all of this is changing significantly in India as well, right? The same trends that we saw globally a few years back is coming to India. Right? For each of the banking services, there is a new age tech player that is disrupting the way banks used to function. And like Arpit also talked about, for last 10 years, even I haven't visited a bank, right, physically. I have not seen a branch for last 10 years. For anything to do with banking service, I can do sitting at home, right? Now, the biggest trend that I want to talk about is, this is how the overall Indian banking landscape looks like, right? In terms of valuation, if you go from left to right, HDFC being the largest bank, this is how you see it, right, as of now. But in 5 years, this is going to change significantly. The way it will change is, tomorrow there is going to be in 5 years, tomorrow there is going to be a fintech player which will be valued much more than HDFC Bank, which is going to be a neo bank, which is going to provide the same kind of services an HDFC Bank provides in much more highly efficient way, in a much cheaper way, to a larger audience, and with a much higher valuation at an overall level, right? So that's the kind of disruption that is happening in the overall banking industry right now, right? Now I am going to talk about how business ecosystem is changing, right? In terms of the business ecosystem, if you look at it, right, what does a business need, right? Business needs to have B2C receivables, B2B receivables, subscriptions, lending, they take loans, right? A business takes loans, it has an internal treasury management system, it has to pay loans, it has to make payments to vendors, their partners, etc., etc. All of this 4 or 5 years back were either in-house or were through a bank partner, right? But now in 2020, all of this has changed significantly. For each of these individual services, there is a fintech player that exists, and they have done significant innovation in terms of each of these services, right? The last trend I'm going to talk about very, very quickly, and then we'll get into a discussion, right, is the digital economy, right? The digital economy, all of you know, is growing significantly, right? Everybody is talking about online payments, how everything is transforming. However, even post demonetization, while there was, a significant change in cash to online payments for a very short duration, for 3 months, we saw the ratio of online to cash changing significantly from, say, 30 to 70 to probably 60 to 40 in terms of percentage contribution. However, even then, there is a significant growth in terms of digital payments, right? With government continuing to push digital payments in the country, right? With all of its new, either regulatory guidelines or through its new initiatives. So if I talk about UPI is one of the biggest innovations of Government of India, right? They launched NPCI, right? And then UPI. UPI is one such instrument which is not present in anywhere else globally, right? UPI is only in India, and it is such a big innovation. If you talk about Google entered in India in the payments domain with UPI. So Google Pay, as of now, is all about UPI, right? While it is transforming to cards and some of the other methods as well. So from that standpoint, government is pushing significantly for digital adoption. Similarly, last year in December, government regulated, in fact, 2 years back, government regulated the pricing of the instruments like a debit card, right? The merchants cannot charge customers for debit card transactions beyond a certain price point. Similarly, UPI has been made free, right? So government is pushing digital payments significantly, either through ensuring by educating customers or general public, or through other channels of disruption. Right now, if you look at outside India, Visa and MasterCard are the biggest networks, right? However, government launched in India RuPay. RuPay is another network which is competition to Visa, MasterCard. Right now, RuPay cards are much more in number and distribution compared to Visa or MasterCard in India. And RuPay is becoming a third pillar of the, fintech ecosystem or the network ecosystem, right? Second point I want to make here is digital payments as of now, while it is still significant, I think it will have a majority share by 2025. Indian economy, we all know, is, cash is the king and there is a great economy. Despite that, we would see a significant change in that in next 5 years. And the only reason being the times are changing, right? In the COVID times, I'm sure a lot of you used much lesser cash as compared to online transactions. And that is going to change in the future as well, because online transactions are much more convenient, much more accountable. And government is also pushing towards that. Accountability is something that, the government wants to bring into the system, which is not there right now. The third key aspect of this, which will further push growth, is new modes of digital payments, which will scale up, right? For example, UPI 2.0, which is all about mandates via UPI transaction. You just need to make or register a mandate for your first UPI transaction, either through, say, an Ola or an Uber, right? The next time you ride with Ola and Uber, you don't need to, enter your card details or submit things. It will get, the money will get deducted from your credit card or your bank account directly, right? Say, for example, Netflix, right? The subscriptions that you take, right? Even if you don't have a credit card with you, you can use UPI 2.0. The money gets deducted for every subscription or every renewal automatically from your bank account. The next instrument which has revolutionized the consumption behavior in Indian economy is affordability. If you during a big billion day sale, if you go to Flipkart or even in Amazon, you would see a lot of offers around EMIs, no cost EMIs, or buy now, pay later. All of this is pushing Indian consumers to go online, right? People who could not afford, say, for example, a 30,000 rupees gadget can now, who are probably earning 10,000 a month, now also want to consume something which costs around 30,000 rupees, which may not be an essential good, right? Just on the back of affordability. Then there are new age payment methods, right, which are Aadhaar-enabled payment systems. Right? Of course, these are still new offerings in the market. These need to scale up in the future, of course, right? But Aadhaar-enabled payment system is a highly secure payment system. It works on your, biometrics. Then Bharat QR. Bharat QR has already tried to transform the way COD works. Right? So, for example, let me take an example of Paytm. Right? When demonetization happened, you would see QR codes of Paytm at even a simple milk booth or a small panwala, right? So that's how QR codes have also transformed the way customers were transacting in their day-to-day lives. Similarly, EPOS, right? Generally, when you go to a store, you use a card to swipe to make the payment, right? All of that is going to change. Right? You don't need to take out the card. You can just make a payment through your mobile application. Right? The last point, I think this is something which Arpit also touched upon. There are going to be more regulations. Government has already started moving in that direction. So far, payment as an industry was not so much regulated, at least in India. Right? There were no guidelines or no regulatory stringent guidelines around how payment aggregators were functioning. Government has already come up with PAPG guidelines recently, which will be implemented somewhere next year, mid-year. Right? Similarly, they have started regulating lending ecosystem as well. Recently, there were a lot of Chinese lending companies was asked to produce a lot of documentation to the ED, because so far some of these lending companies were not regulated, right? But going forward, when government can clearly see there is a significant potential of growth in these new age fintech players and the way they are growing, it becomes very, very important to ensure there are enough regulations so that none of the fraudulent activities start happening. Right. Yeah. With this, I just want to, sort of summarize. So there are enough and more opportunities that lie in the fintech ecosystem, right? So if, like I gave an example of a bank, right? You can pick any banking service and see what are the players there, what is the innovation that you can bring there, or what is the process improvement that you can do in that banking service, and then start something there, right? Similarly, in a business ecosystem, again, business deals with money movement every day in, day out, right? Figure out where the opportunity lies in terms of a particular money movement, right? And overall, at a digital payment ecosystem, of course, is growing. However, payments has become a commodity, right? That's the reason why a lot of the payment companies are now diversifying into other services, be it B2B lending or payouts or some of the offerings. But there are enough opportunities that lie ahead. Yeah. So with that, I want to end my presentation and move it to Vinodji to take it ahead.
Hello, sir.
Can you put Kushal on the screen? Can I request you to put Kushal on the screen? He's in the webinar, but he's not on the panel. You just have to tag him here, please.
I think he has joined in.
No, he's joined in, but he's not on the screen. They're just the three of us on the screen, locked in on the screen. If the organizer can lock, yes, excellent.
Thank you, Mr. Harsh Gupta. We have already consumed about 1 hour and 15 minutes. This session was supposed to be for 1 hour 30 minutes. I thought we'll get enough time to have each of the panelist speakers speak for 15 minutes, then have about 45 minutes of Q&A session. Now I guess Q&A session will be reduced to 15 minutes. Yes, organizers, please confirm. Or do we have the liberty to extend it for some more time?
20 to 25 minutes.
Vinodji, we started at 25 minutes. Vinodji, okay, we started at 10:15.
Yes, sir. Yes, sir.
Okay, so for the for everybody's convenience, what I'll do is I'll try to share the question. I have prepared the question in advance, but then audience can also ask. What I'll do is I'll ask one question to each of the speakers, so everybody gets an opportunity to share his thoughts. Please allow me a few minutes to share my screen.
Vinodji, till that time, shall we answer?
Okay. I thought we'll get enough time, and I'll share few ends also on fintech. This I'll skip. I'll immediately come to this. I'll share with the audience. You can see it later. I have tried to compile the fintech trends for 2021 to watch. You can just have a look at the screen. It was recently published in Forbes. I'll straight away come to the questions. First question to Mr. Kumar Kushal. Will neobanks shake up the banking landscape? I'll request you to please explain in 1 or 2 sentences about neobank also, because this might be a new term for many of the participants.
Thank you, Vinod. The neobanks, there are quite a few of them. Actually, each of you can Google neobanks. It's basically completely branchless banking. There is a company called Revolut in the UK. There is Monzo N26, and the most popular one in the US is called Chime. There is literally about 20-25 large digital banks, and the biggest one is WeBank in China, which is actually the largest neobank in the world. And there is one in Brazil, and there are several of these. The beauty of this bank, like Chime, is you and I as consumers can, with the proper KYC, open a bank account on the fly without ever visiting it, do all the transactions online. And most of the business models, just like I explained in my presentation, is actually lending. People can actually lend to other people through these neobanks. SMEs, small businesses can take loans from these neobanks. And these neobanks connect to conventional finance. They basically mobilize and digitize fintech services through mobile applications, and everything is simplified. And if you really look at the gross transaction volume of these banks, they are worldwide over $500 billion now. If you really look at mobile payments as a vertical, it's about 2 trillion. It's almost 1/4 of all mobile payment transactions happening through those neobanks. And it actually changing this space. And a lot of these neobanks, at least I would say half or even 60% of them will fail because of various reasons. Some of them are, I can give you examples also, like, there is a lot of fintech companies. I was one of the original founders of a company called Vivotech in 2003. It's no longer there because it was closed because of financial fraud. They focus on NFC-based payments. So some of these fintech companies, the faster they are growing, the faster they will fall. But they will definitely shake up the landscape, because if you see a company like JP Morgan, they are a $300 billion fintech company. They are a JP Morgan Chase is a bank, but they used to have 300,000 employees. Because of the fintech revolution, they cut down to 150,000 employees. In that, interestingly, 50,000 employees are programmers. So even the traditional fintech companies are going to become neobanks. So neobank is going to stay. A lot of them are going to fail miserably, but some of them will survive and some of them become great financial success. And the second question, digital currencies. It's one of my favorite topics. I'll answer that question. The digital currencies will definitely form and they will succeed, but it'll be through central banks of governments and nations controlling them, not private companies like Bitcoin running them, because it's kind of kills the regulatory framework. Bank as a stored value is relevant to us only because of the regulatory framework and the strict control of central bank. If private companies are doing this, like Apple is offering a credit card, which is fine, but if they become a bank, it's actually very disruptive. A private company controlling your stored value is going to be regulatorily not possible. None of the governments will allow it because if you see slowly, Bitcoin and cryptocurrencies are going to get regulated. And I think regulated cryptocurrencies like e-Rupiah, e-Dirham, e-Dollar are going to stay, and governments going to offer cryptocurrencies and stored values instead. And if you really look at Libra, the moment Libra came into the space, even I was part of GeoCoin. The day we announced GeoCoin, Arun Jaitley came and said cryptocurrencies are banned in India. That's how governments see, because the relevance of government is actually give us the security, whether it is false or right, and governments are required to control it because the stored value cannot be controlled by an Apple, Google, or Facebook. That's going to be very disruptive and very counterproductive because it will create corporations controlling stored value and money. So stored value need to be with a central bank, and I don't think none of the politicians or political power or World Bank or anybody will allow that to happen.
Thank you, Mr. Kumar. Now, I'll move to Mr. Arpit Agrawal. My first question to you is, how do you see the role of robo-advisors developing and competing with human fund managers?
Okay, so I've partly answered this in my initial talk. There are two things that are happening. As markets are getting more volatile, okay, you don't have cyclical bear or bull markets anymore. And as the latest fall, which is COVID, would have shown you that the fall of 50% and the rise of 110% was probably the fastest that the world has ever witnessed in all of those historical markets. So as markets across the world get more integrated and flow of liquidity is far easier to move from one global market to the other, the volatility of the market is increasing exponentially as we go along. What happens during this volatility, or what has happened, is, again, if you look at the US managed fund industry, which is active versus passive, over the last 5 years, the trends in passive have increased more than the trends in active, which means ETFs, which have emerged as a major force, are outperforming active fund managers in the developed markets. India is a different story. India is a story of entrepreneurship. We have over 5,000 companies listed, and new companies get listed every month or every quarter. And the opportunity for fund managers to pick the future multi-baggers still exists in India. So ETF versus active versus passive is still a longer way. But in one word, robo-advisors are a huge challenge to human fund managers. And human fund managers will have to work that much harder to generate alpha to beat robo-advisors. None of them will disappear, but the competition between robo-advisory and human fund managers will just be taken to the next level. Second question. The biggest challenge that the capital market will face adopting disruptive fintech is one, user behavior, and second is regulatory hurdles. Okay? Because capital market, again, just the way Kumar mentioned, is a store of value. And money laundering, KYC, insider trading are all part of this regulation. And therefore, just the way the automobile industry changed the whole landscape, infrastructure was created in roads, petroleum, and all of that happened. Capital market disruption through fintech is an integrated process where the regulators, market players, and users all have to come together. And sometimes events like COVID just fast track it. Okay. Number three, how do you see ultra high net worth to, what is that? How do you see the retail sales to ultra high net worth customers segments adopting technology? Okay, so retail has already moved to digital. Largely all retail has moved to digital. It is uneconomical for stockbrokers or bank brokers to service retail because the transaction volumes have dropped and the cost of the transaction is virtually zero. So almost all of the retail is moving to online. High net worth moving to online. Ultra high net worth is using technology to assist, gather information, process data, but still relying on humans to collaborate and interpret the data and create portfolios. Because the ultra high net worths don't just invest in listed companies. So there are enough and more ultra high net worths. When I talk about ultra high net worths, I'm talking about the 100 crore plus. And yesterday there was a presentation which you had, Himanshu Kohli giving you enough and more information on this question. Okay, so I'll skip that because I was listening to that session and I think that was a fantastic session. Last, yes, securities lending has been allowed in India since 2008. All you have to do is Google National Stock Exchange NSE lending page, and you can download all the information. You can lend all the FNO stocks. I think there are about 350 or 390 odd FNO stocks. There are set rates. Even as private investors, you can become a member of that and lend your securities from anywhere between 1 month to a maximum of 12. It's a fully integrated, fully automated, fully digital system which has been working extremely well since 2008. Vinodji?
Okay, last, with this, there was one more question. If yes, how do you see emerging technologies such as blockchain or DLT system facilitating it, security lending?
See, it's a process. It's like credit. Okay, all of what does blockchain or DLT do? It just reduces the risk of hacking. You will replicate the same data across multiple servers and multiple nodes in DLT, and it makes that much more robust and efficient.
Okay, thank you. Harsh Gupta, for you, one important question which might take little time is how do you see online payment industry evolving in future?
Thank you. So I think a part of it I already covered in my presentation, right? So I think the way I see it, 5 years back, I think people did not even know about Paytm in India, right? It was very difficult, and there were hardly any e-commerce companies in India, right? So some of the things have happened simultaneously. Amazon coming into India, running big time offers, and also with some of these payment companies coming into India at the same time has fueled the growth for not only e-commerce sector, but also for the payments industry, right? Now people know about Paytm. There is Amazon Pay, there is Phone Pay, there is Google Pay. There are so many players in the payment industry that have come in last 4 to 5 years. In fact, if I talk about Razorpay started in 2015. It has become a unicorn in 5 years. So you can imagine how the overall payment industry has transformed in just 5 years or 6 years, right? And this is going to grow at a 2x or a 3x rate of what it grew in last 5 years in next 5 years. So by 2025, things and the overall demographics of the Indian payment industry is going to change significantly. Payment has already become a commodity in the Indian market right now. And if you look at all the large payment industry players, they are now diversifying into other services. One of those services is, of course, neo banking, right? So in fact, Razorpay as an organization is also diversifying into neo banking space, trying to cater to a mid-market segment and long tail of merchants who were, finding it really difficult to get a simple current account from a bank. It takes almost like 3 to 4 weeks to get a current account opened for a business, for a small time business with a bank, right? The kind of KYC documentation required to open a current account is significantly high, right? So with the new age players coming into it, payments, all of this is getting transformed significantly, right? Similarly, lending, right? There is an underserved market in the lending space, even in the B2B lending space. There are a lot of merchants, be it mid-market or long tail of businesses, who are not able to get credit from banks. Either they have to produce certain documentation, or they need to have certain level of revenues to get that kind of lending or credit line. So with new age players coming in, all of that is going to change, right? For example, corporate cards. Right now, only large businesses have corporate cards or consume corporate cards. Otherwise, if you look at mid-market players or mid-market businesses or small businesses, they use their own personal credit card to procure goods or procure services for their own business. And now there is, of course, a challenge with that, right? You have certain limits on your personal credit card, and then the kind of risk you are carrying with your personal credit card. So all of that is there. So that is all changing, right? Now there are huge lot of companies who offer corporate credit cards to this market, even virtual corporate cards to this market, right? So the payment industry in next 5 years, much more than what it changed in last 5 years, right? Even the adoption levels are going to be much significant, right? In last, I think, like I talked about, maybe right now, the contribution of digital payments is somewhere around 30 to 40%, right? Even if I look at the e-commerce scenario, 70% of the transactions are still COD, right? This is going to change significantly in next 5 years. I view that in next 5 years, the ratio is going to overturn. It's going to be 60% to 70% online transactions and 30% COD. Right. Okay. Coming to the next question, digital transformation. I think COVID has done what the government could not do in last 6-7 years. COVID has actually transformed the Indian landscape significantly from different factors, right? Be it while it has had negative impact on a lot of businesses, travel, hospitality, and all of that. But thankfully, fortunately, it has had really positive impacts on the fintech industry overall. At least as an organization, we saw a significant increase in terms of signups for payment gateway services, right? Almost there was an increase of 3x in terms of small and medium enterprises signing up for online payments. The day COVID started, it is very difficult to operate in the offline space in the current times. So you need to go digital. You need to take your business online. So COVID did help significantly in terms of taking things online. Also, if you would have seen, there was a period of 3 to 4 months when a lot of the e-commerce players disabled COD as an option. for making payment, for purchasing, right? And that they only enabled prepaid methods for making an online transaction, right? So COVID has given that boost to the Indian economy. At least it has cities where people were not even transacting through online channels, right? So with that, I think COVID has brought some good things or benefits to the overall payment industry. Yeah, thank you.
Thank you, Mr. Harsh Gupta. Now, I'll request the organizer, in case there are some questions from the students, participants, you can allow them one by one and let them ask the questions directly to the panelist speaker.
I'll quickly, I've written down 4 questions that people have asked. So, Kumar, anyone? This Himanshu's asking a question, the adoption of digital payments in lieu of illiteracy in the rural market. And one comment I like to make, in the last 18 months, pre-March, I must have traveled to about 150 cities in the country. And just the way the Uber and Ola revolution came, where when I used to ask the drivers, how much have you studied? And he said, I didn't even go to school. But he's very, very easily using an English Ola and an Uber app to understand navigation. I was finding people in remotest part of the country using, just a QR code and paying. But Kumar, you want to add to that? Himanshu's question.
No, I think you are absolutely right. I told you the example in Kenya where people don't even know English, or they are not even literates. They are able to send SMSs and pay money and transfer money very easily. And again, most of the SMSs are in English. There is no local script or language available there. So the need, when it comes to the need of normal people, people will easily adopt. Even grandmothers are using Facebook and Twitter very actively, so people can easily learn. It's a question of the need comes, especially when there is a livelihood comes into the picture. They will learn the alphabets and they'll start using it. So I don't see an issue. Especially SMS-based banking is going to be extremely popular in the rural. You don't even need social media to enable that. In fact, a lot of companies have proven. So that will be the norm in the future. The normal illiterate will use SMS-based banking. You can just pick a number and start transacting on SMS and get things done. And that's how it's going to be. In fact, DBTs and a lot of the programs happening, the money goes automatically to the bank account. 68,000 crores being distributed in certain states. 20% reach destination. Rest of them disappears. Even the ministers don't know where the money goes. There's block and panchayat and ward members, and it's so complicated the way the money travels. Undocumented deliveries. Nobody knows where the money ends up. It's very clearly the new initiatives where totally going to even with the bank accounts, it doesn't make any difference because people go to ATM, withdraw money and give it to the ward member and panchayat member. Still the money doesn't reach even through pure digital. There's a cultural shift has to happen, and people have to see the value of money. And literacy is very important. Once people become literate in Bihar and UP, such things will go away because they don't need to really take money out. And I think ATMs need to be slowly obliterated, in the rural, where people can't take money out at all. It's just everything is digital. So if you want to give a bribe, it has to be digital. So that's where we are going to. I think COVID really helped. If that happens, these problems will go away because there's no way to transfer except digital. So bribes and people, landlords and others who are really cheating the poor servants and farmers, it'll go away. In fact, the biggest problem in India is farmers committing suicide. It's really there are middlemen who are politically motivated who actually handle some money and hand over to the farmer. Even if government pays it, the farmer thinks that the loan shark is giving me the loan. So they commit suicide of the harassment from the money government is paying. That's a huge problem. I think pure digitization and I believe that ATMs should be highly limited and ATM transactions should be monitored very actively. I think AI-driven fraud and risk management will really change the landscape. And these are problems in real life which slowly will go away. because you can see even in US, Al Capone kind of goons were controlling the economy in Chicago and New York kind of cities 30, 40 years. Now they are unheard of. Because it's slowly, India also will transform when this digital revolution reaches the normal, farmers and servants and merchants at the village level. It'll go away. Once everything becomes digital, these problems will go away, but it'll take time.
Okay, one more. I'm combining two questions. One is from Sayantan and one is from S. Seth. Safe to trust Amazon and Google with your credit card information, and frauds, online frauds in the digital world. I mean, my experience is, my dad is 80 years old, and every second day he'll come to me and say, this SMS has come that my password has got locked. What do I do? I said, just erase it, because I'm seeing most of the frauds happen because of human error rather than the platform error. You guys are the platform experts. You want to add some value to that?
No, I think it's absolutely. Yeah, go ahead, Harsh.
No, I think I completely agree with Arpit. I think the way authentication systems have been built, right? Everything is in a tokenized format, right? Even the card details stored on Amazon is stored in a encrypted format in a tokenized way, right, on the servers. So there is a very rare chance of those getting compromised. Most of the frauds, at least what we have observed, at least in my experience, has been human-led, where somebody calls you up and asks you for your credit card number, right? The way systems are built is, even if you share your credit card number, there is a chance that fraud may not happen, but you end up sharing your CVV, then you end up sharing your OTP as well. So, you can't really stop that. It has to be, all of this is human-led. Otherwise, the systems are built in a way that even if your credit card gets compromised, there is a way that your transaction or your credit card is secure, because till the time the fraudster gets your OTP, it's very difficult to commit the fraud, right? That's what two-factor authentication is all about, right? However, that can only be managed if people are more educated. I have seen people who have spent 30, 40 years working in a bank getting duped by these methods, right? I know a relative who had worked all her life in a bank for 30 years, and she gets a call that, ma'am, okay, you will get a special offer from us. You will get a number on your phone. Please share that number and you will be eligible for an offer, right? And the lady shares her OTP with the person after sharing all her credit card details. You can't stop that, right? Literally. So I think from the way the infra is built, the way the entire thing is built, the transactions are pretty much very secure, right? Banking has been into play for so many years, right? The backend infra remains the same. The ATM infra, all the banking ecosystem remains the same, right? I think it's all about education. We need to get more educated about these things. Sorry, Kushal, over to you.
I would like to add here one more thing. You see, we are discussing about small frauds which are committed against a person. We are not talking about, say, organized crimes which are committed using technology. Now, that is the reason Nasdaq last week acquired one company called Verafin for $2.75 billion. Okay, there are bigger frauds which happen using technology. It is, then it is said that if a fraud is committed using technology, it is only the technology which can catch hold of those fraudsters and take preventive action. Those things, I'm not sure how much, how much Indian regulators, Indian stock exchanges are using those technologies. Verafin is now counted as number one company in anti-fraud software, anti-money laundering.
I can just add to that, having been part of the ecosystem, the technology of digitally tracking transactions in the Indian stock exchanges is probably more advanced than most stock exchanges across the world. Way back in the year 2000 or 2002, I remember, one of my ex-colleagues here joined as CEO of one of the largest stock exchanges in the country, and their primary job was digitization of risk management and fraud. So, which is why you don't see too many of that in this country, whether it's the banking system, whether it's, I mean, NPA is not the point of discussion. I'm talking about digital frauds. I'm talking about securities frauds. Probably India is one of the best countries in the world, and we are actually teaching a lot of other countries how to do it.
To interrupt?
Yeah, please go on.
Yes, sir. Sir, I
Vinod
would.
ji, all yours to come up. I think, yeah, we've run out of time. Yeah.
Yes, sir. I would, if you are comfortable, then I would like to call upon Meghna and Aminder to take it further.
We hope you all enjoyed the session. I would like to thank all the speakers for taking their time out and giving us an insightful details on future of fintech.
Sir, I would like you all to stay back for our social partner presentation. Now I would like to introduce our social partner, Sarvahite. Sarvahite is a non-profit organization established in 2015 with an aim to eradicate illiteracy, unemployment, cultural circulation, and poverty in India. Through the years, Sarvahite as an organization has made ample efforts and executed numerous projects to enhance the condition of underprivileged. Now I would like to request Mr. Keshav Datta, co-founder and trustee of Sarvahite, to give us a better understanding of what the organization works for.
Hi, thank you to the organizing committee for thinking of me and of Sarvahite and making them a social partner in this great annual convention of the Department of Financial Studies. Since last 15 minutes, I had been listening to these learned people and illuminaries, and as expected, I seem a very out of place in the context as I don't come from a financial background. But still, even yesterday night, thinking about this supposed presentation that I'm about to give, I was thinking how to make it interesting. So I thought about a couple of points, and I will try to link it with the financial market or the financial aspect of it, so to speak. And I'll try my best, to speak in your parlance, right, and to speak in the words that are understood best by you. But before I do that, let me put in some context as to what do we do, and then I'll try to bring in the financial aspect of it, right? So as said by, Ms. Meghna, our organization is named Sarvahite, which is a Sanskrit term meaning the welfare of all. And that is actually the prime intention behind opening this NGO. Actually, frankly speaking, whenever we hear the term NGO, a lot of questions pop into our mind. And more importantly, in any party discussions or group discussions or any person who doesn't know about this field, they only say, money and making money and those sort of dubious transactions and so forth. And they say that 90% of the NGOs don't work, and actually I do agree with that. But there is just one catch. 90% of the NGOs don't work, not because of any dubious reasons, but simply because the co-founders lacked perseverance. This is a field that is not generous, at least in India. And I'll give you an example of one of the co-founders of Oxfam, a very internationally known NGO. And the co-founder said that if I have to raise 100 rupees in USA, I have to invest like $5, $10. And if I have to raise 100 rupees in India, I have to invest 40, 50 rupees. So such is a great disparity that we have in India vis-a-vis the developed countries. And it was not always the case. In fact, I would like to quote one of the MPs and a very popular political leader, Mr. Sudhanshu Trivedi. And he said that, in the olden times, those were the Seth and those were the rich people who had built and developed wells, who had developed ponds for people, who had developed resting houses, and not the age anymore. And in fact, today the big people are who are earning the big bucks. So that is it. But I see these, trends changing. And before I went on to that, and before I sound preachy, right, I will just try to give you a glimpse of our work. I primarily work in the basic of two categories. One is regular and one is ad hoc. So on a regular basis, we work in the field of education. And firstly, we work in the project Vidya Vistar, that is the expansion of knowledge, wherein we teach underprivileged children in various parts of India, in slums and villages. And as the famous US president said, if the child can't come to the school, you should bring the school to the child. So we worked on that model, and we had small 30-40 number of students sized schools in slums in Delhi, Gurgaon, in places like Nagaland, in Uttarakhand, and many parts of India. And we were teaching, at least before COVID, 550 people, including some migrant workers, Pakistani migrant workers who had come from Pakistan to India before this issue, of course, became so political in India. Another project of ours was Project Paper Bridge, and we are still working upon that. And under that project, we build small community libraries in various parts of India. And when we hear the word libraries, what we really think is these are outdated institutions. And you are correct if you are living in Delhi or Gurgaon or any metro cities, but in places like Nagaland or Jharkhand, and in fact, I was listening to the learned people here, and they were talking about online frauds. And so a very renowned, in fact, the hub of online frauds is Jamtara, that is in Jharkhand. And we built 61 libraries in Jamtara. And in total in India, including all the places, even like Kashmir, Shopian, a terrorist hub, even we have built a library there as well in a government school. So in total, we have had 282 libraries built across India. And in this COVID pandemic, in association with Akshay Patra, we gave away food and ration to more than 20,000 families all over India. So that was done with the help of donors privately or by government institutions or through bigger NGOs like Akshay Patra. So we did that. So I see a lot of change happening in the NGO sphere, in the sense that FCRA rules are tightening. Many NGOs licenses are being cancelled, and I am one to think that this is wonderful, right? Because unless we do a clean sweeping of the NGOs and this sector and all the participants in whatever dubious transactions happen, which has given this image to the supposed NGOs, we can't progress. And I think that NGOs like ours, which work on a hard work and sweat principle, it is better for us if our dirty competitions get out of the way, if I may say so. So I really do enjoy that. And one of the core principles, and in fact, the biggest core principle of our organization, is not just to do good. It also is to inspire good, right? What we really mean to say is, what we really try to achieve is that there should be a culture of social welfare that is not present in our India today. Maybe in olden days, as Sudhanshu Trivedi said, we used to do that. When I was a child and I was studying, I used to study about, during my childhood, they used to teach basic tenets of Hinduism, basic tenets of Islam, and there was a concept of alms, right? Not arms, alms, that you give away to the people who are underprivileged. And it said that in certain cultures, it is necessary to give away 10% of your wealth to the poor. And as a child, I used to think that what is 10%? It's a very small amount. At least give 20-30%. But now, as I grown up and I see the law of Indian companies that is CSR, it says 2% of your profit, and still that is not given away. So that is the ground reality that is there in India. But at least that culture is changing. And that culture is changing primarily because of two reasons. And herein I talk about two supposed financial aspects that at least I know about. One is related to marketing, right? So I've also worked with various marketing companies, and from what little I understand is there is a concept known as cause-based marketing. So in previous days, what used to happen was they used to design a very beautiful advertisement, and they used to mention the quality of the product. And I'm sure many of those young people sitting here like me must have seen Mad Men, the series based on marketing agencies. So that was the culture then, but now the culture has changed, and each and every product and each and every service and each and every marketing company or any product service coming into the market showing any advertisement relates itself or connects itself to a cause, that is a social cause. uh, Whenever Mark Zuckerberg talks about Facebook, he doesn't talk about the money or shareholders or the prices going up or anything like that. He talks about the social value the Facebook has. He talks about how Facebook is bringing to people together, especially in COVID times. Uh, Whenever in recent times, last year or a couple of years back, when Reliance launched Geo, they didn't say that how much money we are gonna make. They said that let us see the power of data that we give to the common people and they will use for their own good. So even if the motives may be financial, it is at least presented in a package that sells social value. In fact, trillions of dollars are being spent all over the world in advertisement and marketing, and most of it, at least the trend is going towards that they will try to attach themselves to a social good. And that is herein competitive NGOs like ours come into the space, and we can surely say that yes, we have a workable model of education in health sector, in whatever in technological field you can use. If you're a tech company and you want to invest in a social project in technology, then perhaps you could build smart classes. So these are many newest things are coming in the field of education that can be democratized and actually be implemented at the government school level also, because technology is not for the people who are tech savvy. Actually, technology is for the people who can't seem to understand the traditional way of knowledge. As I'm sure all of you may already know, that it's more difficult to read books and it's very easy to grasp knowledge by audio and video, and that is what technology does. And therein how tech companies can step in the field of education. I'm just giving an example, and perhaps they could do their marketing this way, and it would benefit both the society and the company. So this is the first example, that is the cost-based marketing, in which many marketing companies and big companies are now investing. Uh, they are growing slowly. Today, what the trend normally is in an average or small sized company is that they select a NGO which perhaps they found on internet, or which perhaps their HR department or the admin department came into contact with somehow through LinkedIn or through Googling or a friend of a friend. And they just simply call an NGO guy like me and say, look, do you have an orphanage? I want to bring my 20 employees for a day, have a picnic there, and they will distribute sweets to the kids. And frankly, this is only for feel goody factor of the employees. And that is also a part of the CSR. CSR does help retain good employees because it creates a very good atmosphere. And that is also another good function of CSR, that it retains good employees. But I'm sorry to say that most of the companies are not going in the long-term investment plans. They are not going into long-term solutions. They are still at a very nascent age in India, at least, and they only look for feel-goody factors, that, oh, today is our founder's birthday, we'll bring a very big cake, a 12 kg cake, to an orphanage, and we'll cut and we'll give a slice to that poor child and that poor child will be happy for a couple of hours, but actually no real contribution made. So, but India will develop, as it is developing in all the sectors. India will develop how it does its CSR, how it does its social welfare projects, and company will come into terms for that. Another reason for that is also because it may affect the company's valuation. I was reading there is also a concept known as social valuation. Now, what that really means is that each company should try to include within its goals and mission statement at least one SDG, that is Sustainable Development Goal, because the future is that even the valuators, the people who create value for the company, or just estimate what is the value of that company, do a valuation, they are now also including sustainability as a part of it. Previously companies making, so that was the valuation. Then came in the brand name, the brand identity. That is something that is non-tangible, but then within since this last 20-30 years, even that got it into that is also a factor that people took into account while having an estimate of the valuation of that company. And now we are seeing a trend. As an NGO person, I can say that now we are seeing a trend where the valuation of company will also have one of these, such as what is the social valuation, what is the ecological response of that company, what is how that company is helping the neighborhoods, what is the environment conservation plan of that company. Because researchers have shown in various fields done by various scholars and scholarly articles, you can also read them, that there is a positive indication and there is a positive upward trend, and there's a relation between how sustainable a company is, how it does its CSR, and its company valuation. So we have tried, from an NGO's perspective, appealing to the goodness of the hearts of the people, and frankly that has not worked. Oxford president, it's still required to invest 40-50 rupees to raise 100 rupees. But if now because you people are the future financial leaders of the country, maybe when you graduate and you become CFOs of the company or even CEOs of the company, you could steer them in the correct direction, because you know that what is good for the company, at least on a long-term basis, and you could take decisions. Another example is that even the CSR law that requires a company to invest 2% of its profits towards social welfare projects. And what most companies, in fact a big chunk of companies at least, do is that they just draw that money out and write a check to the Prime Minister Relief Fund, because that also counts as a compliance. So even now, what many companies see CSR is just another compliance and not an opportunity to create a healthy environment for their employees. Not an opportunity to invest that money towards a neighborhoodly cause and earn some good reputation. Perhaps be cozy with the local politicians. That can also be done by many companies, but companies are not taking that advantage. And I can only hope that in future this trend changes. And as I said before, that we mature into a more a kind of an economy, a kind of an environment where companies do see CSR effectively and seriously, as not only just to do social welfare and to feel good, but at least even as a long-term market strategy. And they value the importance that even our doing good will have an impact on the valuation of that. So in that aspect, I mean, my only summary is to see that there are many intangible aspects of social welfare. And I guess when all of you came here and you were beginning to listen to me, perhaps what you're expecting me to do is just show you a few pictures of the work that we do. But I've tried to take a departure from that and just give you a glimpse of our work and more focus upon what you can do as you financial futures of India. And I wish you all the very best. And I thank once again the organizing committee of this annual convention. I try to keep it short and sweet. But if you have any more questions, you can ask me. Otherwise, I hand over to the organizers. Thank you. Thank you so very much.
Thank you, sir. It is the people like you who are associated with such a noble cause, who inspires and works for the betterment of society and aspires others to do the same. I'm pretty sure after your seeing your efforts, others will get inspired and will work for the betterment of society as well. Thank you for giving us your time and inspiring us. Thank you.
Thank you.
Hello everyone. We hope you have found the knowledge which have been shared by the panel meaningful. The next discussion we have is on a very interesting topic, which has been a buzzword for past few years, the future of business analytics.
So without taking much time, I would like to introduce the expert panel, starting with Dr. Shubhra Datta, Chief Analytics Officer at Retra Finance, He is a high-performing analytics professional with 15 plus years of experience in the application of analytics and business intelligence.
He has built and led a profitable analytics team with a pre-sales, client engagement, and P&L responsibility. He has developed award-winning analytics products for various verticals like banking, insurance, travels, telecom, and healthcare. Sir, a tree has been planted in your honor. I would request you to accept it as a token of gratitude from the department.
Next in line, we have Dr. Shakti Goel, who is a Chief Data Analytics Officer at TBO Group. Dr. Goel is in charge of developing the roadmap of data architecture, data analytics, and machine learning with a focus on artificial intelligence. He is also a technical advisor and board member at TWI Online, a Dutch organization.
Dr. Goel possesses the exceptional problem-solving ability and tremendous knowledge with over 21 years of work experience in areas such as web technologies, big data, data architecture, analytics, and machine learning. Welcome, sir. As a token of gratitude, we would like to present you a tree which has been planted in your name.
Next in line, we have with us seasoned consultant and an entrepreneur, Mr. Ranbir Heber, who is a founder of Convergetics, a business intelligence and analytics consulting company that started in 2013.
He has over 20 years of consulting experience and has worked with various large MNCs, both in India as well as USA, Canada, Australia, UK, Hong Kong, China, and Middle East. He has managed
several teams of 50 plus people and helped grow Convergetics to a multi-million-dollar entity with a strong track record of delivering value to its client.
He has developed and taken a couple of products to the market, including the latest automated intelligence solution for SaaS platform called Blink.ai. Welcome, sir. A tree has been planted in your name as a small gesture of gratitude. Once again, a warm welcome on behalf of the department.
That's the panel for the day. Now I would like to introduce the moderator for the session. He is an alumnus of Delhi College of Engineering and also an alum of our own institute, Mr. Varun Kaushik.
He is a data science and business analytics professional with more than 9 years of work experience. He has worked with various organizations like Bank of America, Chi-Square Consultant, and Royal Bank of Scotland.
In the past, he has served as a faculty in premier institute like NIFM, Great Lakes, ICFI Business School. Welcome, sir. A tree has been planted in your name. Kindly accept it as a token of gratitude from the department.
You can all track this tree by the number in the certificate which will be sent to you. Once again, a warm welcome on behalf of the department.
Now I would like to request Mr. Varun Kaushik to take over the stage and proceed with the panel discussion. Thank you, sir.
Okay, thank you so much for the organizers. So I hope I'm audible to everyone.
Yes, sir, you are audible.
Okay, thank you so much. So first of all, thank you so much, Keshav. I think the work that you're doing was really good. And trust me that, but I've been into your shoes as well. And when I see the amount of effort that you're putting in something which deserves a lot of, a big round of applause for sure. Now, again, starting with the session, hello everyone. We would welcome you to this wonderful knowledge sharing session where we have a panel which is probably very distinguished, and this is hosted by Department of Financial Studies, and I hope you and your families are doing good. I want to thank all of you for joining us today. From our early stages in our lives, we are actually asked questions and we are expected to give out answers, and we certainly come to believe that the true test of one's intelligence is the capability, and the intent is actually to come up with an answer, right? So we sometimes call this as the curse of intelligence, because we feel that we are, or probably we are made to believe that this is our true test. So when the problem is posed in front of smart people, they actually feel that their instant reaction is to solve the problem, right? Versus that they try to solve it fast. We take the fast problem solving as sometimes as a reflection of our intelligence, right? The more I studied some truly exceptional people, I worked with exceptionally driven individuals as well. And some of them are, I've interacted with some of them who are sitting in the panel as well. The more I realized that brilliant people don't solve problems. They ask questions, and questions are the ones which allow you to solve the problems, right? For some of these questions, let's go to our distinguished panel. We are joined today with Dr. Shubhra Datta. He's worked with Retra and as a Chief Analytics Officer, Dr. Shakti Goel,
again working with the Travel Boutique Online as a Chief Data and Analytics Officer, and Mr. Randeep Hebar as well, who is a co-founder and EVP with Convergetic Solutions. Now, they all would be, along with me, will be trying to share their expertise and the knowledge on the topics of business analytics and analytics. So please, everyone, let's give a big round of applause to all of them, and then we can probably begin with the panel discussion. So if the panelists are comfortable, sir, can I go ahead and throw in the first part for you? So the questions were pretty much discussed. So we tried to cheat here, that we thought of discussing beforehand that what all we will be discussing in terms of the question. An open-ended one where what's your opinion on the future of analytics for the sector that your company caters to, and as a domain, what is the impact of COVID that you see in the future plans? Because we know that you must have had some certain plans for your companies. How has COVID impacted that in terms of the plans that you have? So starting with Mr. Randeep, would you want to take first?
Sure. You hear me?
Yeah, loud and clear. Thank you.
Okay, awesome. So first of all, thanks for this opportunity to the department and to the organizers. I think it's great to be in front of so many smart young people who are spending a Saturday, listening into a range of sessions. I was listening part of the earlier conversation as well. So again, thanks for the opportunity. So I think, like I was introduced, so we've started this company in 2013. First generation entrepreneurs who kind of started this. So we focus on data and analytics, especially focused around from a sector's perspective, retail, quite a lot, BFSI, manufacturing, ITS, and CPG. We do some work on other sectors, but these are the sectors we focus on. But from a function perspective, we focus a lot on CRM, marketing, digital, pricing, and a little bit of merchandising, right? So and just to give you the context, I'm looking at business in India. So some of the contexts and some of the, while I do work with a few clients in US and Canada as part of my role, and I've done a lot of work in US before, my current role is mostly focused on India. So some of the insights will be more to do with the analytics sort of trends in India, right? So I got into the analytics sector about 12 years ago, right? When analytics was fairly nascent, there were a handful of companies that were doing well. Today, there are like hundreds of companies. While that's a bad thing for some of us, in terms of the competition that we have to deal with, it definitely is a boon for students like yourselves, right? You have a lot more opportunities to kind of come in, and it is a growing sector, so it's definitely a good space. From a COVID impact perspective, Varun, that the question that you asked, so I think the business has definitely been impacted for us. I would be lying to say if it's not been impacted. The Q4 of last year, right? The Jan to March was slightly hit because I think the impact started coming in March, right? A lot of renewals kind of got slowed down and stuff like that. Q2 was really bad. I mean, Q1 was really bad because almost everything was in pause everywhere, not just in India, but even our US and other markets were hit. Q2, I think things started picking up, but I think at this stage, we are at a stage where things are coming back to normalcy. I wouldn't say it's fully back to normal, but we've started getting a few new orders which were delayed in Q1 that now just started coming through and stuff like that. Things are looking better. It could have been obviously a faster recovery, but I think things are definitely looking good. And I think some of that is showing up in the GDP numbers and some of the financial numbers that have been recently shared, right? It definitely does show that things are looking up, and we are also seeing that positivity. So the other impact of COVID that we are seeing is definitely in terms of a shift in demand, right? And we have seen some of the early trends, and we are also trying to cater to that as a agile business. So I think there's a lot more demand in the healthcare sector. So we did have a few clients in the healthcare sector, but I think we've added a few more, and we've kind of invested a lot more time on the existing healthcare and pharmaceutical companies that we work with. I obviously can't take names of the companies we work with, but we work with quite a few large companies in India in the healthcare space, and we are kind of spending a lot of effort in trying to grow that, strengthen that engagement, and do a lot of work, as well as build more solutions in that space, right? So, and there's also a lot more focus on digital because of especially the ITS companies and even other companies, moving towards remote work from home, digitization and doing the factory to a little extent. So I think that is also leading to a lot more data and a lot more opportunities for us Because once there's more data, obviously there's a lot more decisions that you can make with that data, right?
Yeah.
And that's what will give you a competitive advantage, and that's the core of analytics as a space. I think that is creating a lot of new opportunities, and government is bringing in a lot of regulatory constraints. I think there's a discussion on security in fintech and stuff, right? So a lot of new regulations coming in that also mandates, fraud detection. And I think we'll talk about a little bit more in the portions. But again, I know a long answer, but just wanted to kind of both introduce myself, the company, and also kind of answer the question.
Thank you so much for the wonderful words. So we'll maybe now move on to Dr. Shakti. Sir, what would be your thoughts on how analytics is actually going to shape in the future for you, for your domain, and probably the impact of COVID as well?
Yeah, sure, Warren. Hey guys, first of all, thank you for inviting me, Department of Financial Studies. It is so nice to speak in front of such intellects, who are aspiring to, who just want to go out into the world and make a name for themselves. Now, a brief introduction about the company. Travel Boutique Online, or the TBO Group, is a B2B company and probably is the largest B2B company, the travel domain in Asia. I know it's the largest in India, and it competes with companies like Make My Trip, which are in the B2C space. See, I have worked over a career of spanning over 20 to 21 years. I have worked in quite a few industries. My most recent experience is in travel, but I've had a chance to work in financial markets, capital markets, health sciences, retail, government services, and defense. And what I found is that, so the first warehouse I built was in 1998, and that was at that time the third largest warehouse in the world. And it was a 5 terabyte warehouse. And that was a time when 1 terabyte used to cost like $1 million. What I've seen over time is that business analytics has now become an ecosystem, right? It is an organism in itself. And since it has become an ecosystem, it is now impacting a lot of things. So what is the future of business analytics hold here? What is it that we need to do to work in this ecosystem? First of all, the place where we are spending time is on data cleaning and management. If you've got good data, you make good decisions. Bad data will lead to bad decisions. You have to worry about data security. You don't want the hackers, people, as the technology is growing, there are a lot of people who are very smart and they know how to get into your system. So data security has become important. And so is the scalability. As the demand for analytics grows, the scalability of the data has to be maintained. Now, business analytics, I think, is becoming democratized. Everyone in the company is doing business analytics. At least that's what's happening in the TBO Group. So what that means is that we don't need specialists as such. Earlier, maybe 5 years ago or 10 years ago, there would be job postings saying that we are looking for an Excel expert who can prepare reports for us. That is no longer happening because everyone is now preparing those reports. However, there are still some specialists, especially in the field of machine learning, say for instance, data privacy and GDPR, that is becoming important. GDPR stands for Data Privacy Regulations, and the European Union is very strong and particular about it. The other thing is people don't want to maintain their data center, so there's a lot of cloud adoption. Right, a lot of analytics is being done on the cloud because of this TCO, the total cost of ownership has gone down significantly. Analytics is now becoming embedded, right? Earlier, you would have a team of people who would just look at data and then they will build a warehouse and they will run the reports. But now, if you look at applications like Salesforce, it's a leading CRM application, and you would find that reports are sprinkled all over the place. So that is also the future of business analytics. Now, almost every vendor has a chatbot. If you look at Swiggy, if you look at Zomato, if you look at any banking application, you will find chatbots, right? So a lot of work is being done here, and a lot of work on analytics is also happening here. You also want to know who your customer is. You want to know exactly what that profile looks like. So there's a lot of work happening on personalization. earlier, what the companies would do is if they had large amounts of data, they would simply purge it, right? And instead of purging that data, now we are storing it in something called data lakes. Data storage has become really inexpensive. So we don't want to lose data. And this is a new trend. Like companies are having petabytes and petabytes of data and they don't want to get rid of it. Now, one important thing that's happening is that new big data technologies are emerging. You might have heard of a recent IPO of Snowflake, which happened in September. Snowflake is a major big data company and it's valued at $83 billion. That itself shows, what the market, and I think about analytics. So I think this is where I think the world is going. I mean, and as far as the impact of COVID is concerned, in our industry, we found there were reduced international travel. But when we analyzed data, the interesting thing we found was that a lot of domestic travel is happening. So people were not crossing borders, but within the country, they were traveling. And they were looking for new destinations that were never searched for before. So from India itself, people were finding all these new locations in Uttarakhand or Himachal Pradesh that you would have never heard of. Within Saudi Arabia, Saudi Arabians like to travel a lot, and there was a lot of domestic travel there. So that was an impact we felt of COVID, but otherwise, our sales went down by like 90%, and we felt the same pain that everyone else did. So Warren, sort of a long answer to your question, but I feel that the audience, if you are trying to get into business analytics, just don't think that you are getting a job with business analytics. You are going to make a career in an ecosystem. Okay, so start thinking like that.
Thank you so much, Dr. Shakti. And probably on those words, I can relate to an example where I had a fashion technology graduate. He walked up to me and said that I'm able to forecast the numbers. I'm able to do the forecasting of stock prices of Yahoo. And I was amazed at how did you do it? So he said, I just imported the numbers in Tableau. I had a 14-day license and I can do the forecasting. And this is where it is, I'm not saying that the numbers might be very accurate, but at least it is not limited to a perfect set of skill sets. It is now much more open. The tools are inclusive. And with this, I think I need to go to Dr. Subra as well. And I would love to have your answers as well, sir, probably. What would you think for your domain, for your industry? Has COVID really impacted your future plans? And how does it shape for you?
Yeah, thanks. Thanks, Varun. I would like to thank the organizing committee also. I work with RETRA. Now, RETRA, I'm not very sure. It's not a known firm as such, but it's funded by Edelweiss. 70% is holding is with Edelweiss. It's like, how do I put it? We are in the fintech space. Initially, we started, I'll probably go a little bit this thing reverse. When we started, we wanted to be in the business of, co-creating different financial products and booking the loan in Edelweiss portfolio. But you know that from March onwards, this COVID started. Now the impact, yes, impact was huge. In fact, if you look at the RBI prediction and projections in the stress testing that they have done, in March, about 8.5% was the NPA. But they are expecting that this NPA proportion will be 12.5%. And in worst case scenario, probably it will go up to 14%, which is about 80% rise in NPA. Now, if you look at the kind of provisioning that has been happened in banking sector, everyone has provisioned it. Their provisioning has gone up drastically. So in the month of, say, April, they are provisioning, just to give you an example, that ICICI Bank provisioned about 1,000 crore. Now the provisioning in June happened to be more than 5,500 crore. And a similar proportion for all the other banks also, depending on their book size and all those things. So yes, the impact has been there, no doubt about it. When your economy goes down by, say, 24%, so obviously impact would be there. Now, how people are, say, pivoting it, say in the month of April itself, we decided that obviously, because of the slowdown, lockdown and all the other things, people will not take loans, or you cannot give loans. Obviously, the economic activity has come down and all those things. So what we did, we know that this NPA will go up, and as an organization, RETRA, what we did, we focused on collection. Now we are doing a collection. Our entire sourcing acquisition has stopped. We are doing collection for some of the bigger clients, Bank of Baroda and all those things. So that is one thing that I personally think that it will be there. Asset reconstruction will be there, even though in last 6 months, no asset reconstruction deals has happened. I mean, it's like if you look at, I mean, last year we had about 60,000 crore worth of deal, but even though say AWS, I mean, they are having the largest ARC in the country right now, $1.2 billion they raised last year. But if you look at the deals has not happened much. One of the private banks who is having a ARC also, they had a deal of say 550 crore, which is a very low number. If you look at the kind of NPA that people are having, even SBI is having about say 1.7 lakh crore worth of NPA. So I personally think that that would be one aspect. Now, in terms of how I look at the analytics would be done by the financial sector, as you people, I mean, everyone probably has worked in financial sector, and financial sector BFSI is normally they are the first ones who use the analytics, and then it goes to other this thing. But if you look at the AI and ML sides, they did a little bit better. I mean, initially the adoption was much faster from their side. See, the usage of different technologies depends on the use case also. I mean, I cannot have a AI model probably for my acquisition scoring. That's a bit risky, but and not required probably also. And see, if you need it, then probably you use it. The kind of changes, I mean, whatever Shakti has mentioned, yes, everything is there. I just would like to add that how we are shaping up the future probably is voice and video analytics. When I say voice, to give you an example, I mentioned about say collection analytics. In collection, I call people and say the person says that yes, I will pay you on so and so date, which we term as promise to pay. But normally, say about 70% of them will not pay you on that particular date. So from the tonality, from the if you can extract something, see, if I talk to someone, I mean, a face-to-face interaction is there. I talk to someone, you get to know that, okay, the person probably will pay you, or how honest his commitments are. So this is something that I personally think that will catch up. See, Alexa, everyone is using. I mean, in Flipkart also you go and through voice you place an order. But in financial sector, but this is one of the use cases that I see that everyone probably would be eventually doing it. Now it has not come out that well. Now there is many companies, I mean, they do facial recognition and all those things. Based on the picture itself, they will get to, I mean, they will give you a score whether the person is credit worthy or not. Now, obviously, that's not very simple because they at the back end, the data, I mean, there are millions of images that goes into analysis. There is a Israeli company called Facetone that they have got many awards actually. In fact, people are working with them. The other aspect that I personally see is the video analytics part. When I say video analytics, like say earlier how lending used to be there. I mean, the field officer used to go there and talk to the prospect purpose and all those things. Now, in this current times, you don't have to go there. I mean, KYC is happening through video. But that's not the thing that we are discussing here. We are discussing that if I talk to someone, the way the intention can be gauged, I mean, you can, through video analytics also, you can actually identify it. You don't have to go there through body language and other things. You can do this. And it's like standardization also. So for instance, I mean, what happens? I mean, say multiple credit officers are there or loan officers are there. And they used to jot down their points and then you keep it somewhere. You do not know how to analyze the data, or at least data entry was a challenge. But nowadays those things will be gone. I mean, someday there would be, I mean, loan officers, all the face-to-face interaction will happen. So these are some of the technological changes that would be happening or are happening. And COVID definitely had some impact.
Okay.
Yeah, I'll stop there.
Thank you so much, Dr. Subra. So I was actually talking to one of my friends. So he works with one of the biggest private banks in India, and I don't want to name the bank, but obviously it would be very much clear which bank this is all about. So I asked him that how do you detect fraud? I was working with Bank of America, and then with RBS we were working on certain models to identify some fraudulent transactions. And I was curious to know that how do Indian banks actually look into the fraud that are happening. So that friend of mine is a very close friend of mine, and he said that we look at the person and we find out that would he give us the money back or not. and it seemed a bit funny, but somehow this is how things work. And then I asked him that, okay, how much loans do you offer? So he said that we are intelligent. We are intelligent enough. We have that inbuilt. Our banks are built on values, and we identify intelligently that who's going to return the money. So I found out, okay, so business intelligence is something that we need to connect the dots to. So Mr. Randeep, do you feel that there are some innovations or some changes that are bound to happen in the near future? To feel that there are changes which are going to come up in the BI sector as well?
Yeah, no, I think that's a great story, Varun. I think so. I actually have a close friend of mine. He was working with another another company that used to do help with video analytics for interviews, right? So almost have a instead of sending a resume, actually have them kind of send out almost a video of answering a few questions and stuff like that, and actually feed that into an algorithm. And almost by studying the body language, studying by how genuine those answers are and stuff like that, actually filter out the profiles, right? It's and I think eventually I think they got acquired by a pretty large company recently, and he's now part of that company. So it's definitely an area which has a lot of potential. I think anyone looking at analytics, AI, and especially video analytics, like Dr. Shubhra mentioned, is definitely an area that is picking up, and there's actual use cases, right? It's not really stories that we're talking about, and not stories outside. Some of these stories are the ones that I'm talking about being built in India, obviously targeting other markets as well. And so definitely a lot of scope, a lot of real use cases we are seeing. About 2 years back, it was only a niche area, but I think now I'm seeing a lot of practical examples, right? We ourselves have done quite a few things in the AI space around video analytics, image analytics with movie halls. We've done something in the retail space around studying the traffic coming into malls and stuff like that. So there's a lot of work happening in the video analytics space. It's still not widely implemented, but that's where I see the future going, right? In terms of BI, I think there's 2-3 trends that I want to quickly talk about, right? And that's again an area which we've invested as a company quite a lot in. I in fact had the BI practice within Convergetics as well. So there's obviously, I think earlier people were using, like I think one of the panelists mentioned, a lot of Excel, right? So today obviously Excel is widely prevalent, and everyone knows Excel today, almost like a prerequisite. It's like knowing English today, right? So you need to know Excel. But today I think the world is moving to a lot of self-service, right? So whether it's tools like Power BI, Tableau, and there's about a dozen more tools which are almost in that space, right? So a lot of them offer self-service, which means 3-4 clicks, you got the data into the tool, and 4 or 5 more clicks, and you're getting your analysis and your insights from that, right? So it is becoming more and more self-service, and that's where the world is going to move towards. So again, just like people started using Excel, widely, I think people will start using these tools widely. So as students, I think the students should almost, I think like someone else mentioned, Tableau, there's a free license. In fact, I think Tableau offers a student license, I believe. I don't know if they still do. They used to do about probably when
they do.
I was studying. So you can just download it. You have a limited license, play around with it. A lot of other tools offer it. I think that should almost become like a skill for you that you should adopt. The other trend I see is a lot of shift towards mobile, especially with COVID again, right? So a lot of people are working from different locations, so they need to have data in their hands. So all of these tools as well, and even embedded solutions like some of the people spoke about, they have a mobile-friendly kind of experience so that people can make decisions. Machine learning is getting integrated with BI, right? So it's great to build a fraud detection model, but if you can't in real time, push that to the end user who has to make that decision, whether it's a loan officer or whether it's a retail banking guy, or whether it's a customer support agent, right? If you can't feed that in real time into his a dashboard or a decision-making thing, it almost loses its, because it's more a real-time thing, right? You need to push it real-time into the dashboards or wherever the user is making decisions. So there's a lot of ML getting integrated into BI, and that's a big trend. because ML is getting commoditized today. I think there's enough models around. You can build a model in a few minutes, but how do you leverage it? How do you integrate it with your business process flow? I think that's another big area which I see a lot of adoption and integration into BI. I think NLP, someone else spoke about. I think there's a lot of move towards, asking a chatbot questions and getting answers. So I don't, need to, spend time going through even a dashboard, right? A dashboard makes it easier than going through a whole table of numbers. But why don't we, the next stage of, adoption is me just as a CEO, just, calling Alexa or Siri or, like a custom bot and saying, okay, how's my sales today, right? Who's the top performing sales person in my team? Something like that, right? And getting an answer immediately in English language, almost like having a virtual assistant who can answer any questions for him because the data is structured and prepared in that way. So just a small plug, I think we've kind of, as a team, we've kind of adopted all of these trends, and I think in the introduction, somebody mentioned, so we are trying to build all of these things into a plug and play solution called Blink.ai. Again, we've not adopted all of this, but we've kind of identified these trends, and we are building these features into a standalone solution as we speak.
Okay, thank you so much, Sandeep. So the idea is, so when I passed out from this college in 2014, and I walked up into my first job, my first manager asked me to apply an index match function. So we did go through it in college, but somehow it was an overwhelming experience to put someone standing on the top of your head and asking you to send the report as soon as possible, and then you lose your cool. And that probably prompted me to think that, okay, is there a significant need to go for the learning of the tools, knowledge of the tools, go for the basics of the statistics, or probably talk about the business as well? So now, Dr. Subra, do you think these all different parameters or three pillars, they all are equally important, or how as a student one should foresee when they're entering the domain or any domain, or probably entering analytics? What should be the weightage given to tools, statistics, or probably the domain?
Good question, actually. See, the thing is that if you do not understand the business, probably there is no, use of tool. If you do not probably understand the tool, you cannot solve the problem. So how I would like to put it, as a person, I have never put much importance to tool. There is a reason to it, because tool, if you look at the softwares, someday Excel, if you are very good, Excel is something that earlier probably a sophisticated calculator, right? And then you keep on putting all the things. So my suggestion would be understand the theory first. If you understand the theory, if your maths are relatively strong, then you can do a good job. Tools, yes, definitely important. See, it depends on the problem also. If I'm just asked to do a arithmetic 2 into 2, then I would be able to answer. But if I'm asked some complicated functions, it's very difficult. So it has to be a match. But my suggestion would be pick a particular tool, master it. So for instance, if you decide today that I will be a master in SPSS or a master in anything, a tool, say a Power BI, it's a free tool for everyone. I will master a Power BI, perfectly fine. In Power BI, I want to learn further and further. Yes, do it. Go deep in a particular tool, and believe me, at least I never faced problem in picking up another tool. Say for instance, I started with, for everyone, people who come from statistics background, they start with a R or Excel, they combine both the softwares along with say SPSS, gradually you learn SAS. So mastering one tool is more than enough. Now people know R, Python, anything you throw it, because the logic, what a tool gives you, it builds your logic. If you are good enough, understand the logic, then I think the problem is more or less solved. But everyone should be focusing probably more on the business side of it. Tool, there would be many people to help you with the tool. Business is something that probably, that's the core question that you are answering. Tool, anything can solve the problem actually, probably.
Right. So
to give you an example, to give you an example, everyone, we are talking about the changes that is happening in terms of say analytics. See, nowadays there is a concept called AutoML, automated machine learning algorithms. Say a software is there, H2O, founded by Indian guys. H2O If you put the data there, they will build an auto ML themselves and will give you the final result. To give you an example, a few days back, last to last month, there was a competition in Kaggle. The auto ML of S2O gave the result was in top 2%. So that's the kind of accuracy that people are reaching. So does that mean that you don't need business knowledge? No, you need to learn statistics, because people say that 80% is data cleaning. Then you are left with 20%. Out of that 20%, 80% of the time, you need only summary statistics, mean, median, mode, and all the distributions. Left, you are with some 4% odd. There you need to decide whether you need a model or not. So practically, there are very few instances where you need model. Most of the business questions are answered through your summary statistics. Right. So focus on basics, focus on, I would say subject, and then tools you can pick up anytime.
Yeah, perfect. Thank you so much, Dr. Subra. Actually, I was approached by a lot of students, and based on my past interactions, they generally had this question. So Julia is in the market. Should we go for Julia? And you hear those buzzwords and then you feel excited as a youngster that should we go for the tools? And somehow I feel there is a need for us to understand that data cleaning is somewhere very, very important. So Dr. Shakti, do you think that if a business is actually going to make decisions on the basis of bad data, will it necessarily end up wasting some time and resources? And if we take this as an instance, how do you think companies can actually fix those data problems, or probably challenges related to data, probably data leakages or unclean data, unstructured data? How can they work on good data and probably make the bad data as good data?
Right, that actually is a great question, Varun. The entire BI industry, the entire data analytics industry hinges on having clean data. If you don't have clean data, so a statement saying that what's a computer? A computer actually is an idiot box. It's basically bad input and bad output, right? That's what it does. So the same thing happens in BI. If the data is not good, if it's not clean, then you will make bad analysis, then you will do bad analysis leading to bad business decisions. And then there will be severe repercussions. If the business decision was made was bad, then it will reflect very poorly on the business analytics solution, right? So that will affect the reputation of the person. So I would say that, if you look at machine learning, you spend around 60 to 70% of your time just preparing data. Even for BI analysis, if you want to calculate sales, data, having clean data is very important. I'll give you an example of the travel industry. So we encounter cases when we get, feeds for the hotel prices from various suppliers. Sometimes, if you get a feed from Indonesia, rupiah is 20,000, I think, rupiah to $1 USD. And sometimes they will say that the room price is 2 million USD, right? That is clearly wrong, because it's actually 2 million rupiah and they need to convert to USD. What if the exchange rate is off even by 10%? Just imagine the impact it will have on your sales numbers, right? Things like that. So, what I do actually in my company, and that's very important, is that I have very strong data stewardship and ownership. There are people who are aligned to different product lines. If there is bad data with hotels, so you go to this person. If it's with airlines, if it's with car rentals, sightseeing, cruises, anything like that. So there is a data steward who will go and fix the data for you. But there is another thing that's there when it comes to data. Your data may be good, right? But there could be uncertainty in that information. For example, if you want to go and buy bananas, right? So if I ask you, what's the price of bananas, right? A person would say it's like 50 rupees to a kg. The other person will say, no, it's 80 rupees to a kg. So there is a spread, right? There is no one answer. Data should not always be seen as deterministic. It could be chaotic also. It could be stochastic. And basically, if you're building a model, or every machine learning thing, or every BI report, actually it's based on a model. A model has an input. A model has some constants, like the model parameters, and then the model makes a prediction. So the input could be uncertain. The model parameters could be uncertain, and therefore the output could be uncertain. So if I'm going to make a sales forecast and it's going to be, and it says 8 million USD, is it going to be 8 million USD? No, it could be it could be 7.9 to 8.2 million USD. Then what's the distribution of data? Is it like normal? Is it like Gaussian distribution? Or are we looking at something else, or is it like, is it binomial distribution, for example? So these are the things that you have to keep in mind. Recently we had published a paper on this, and there we mentioned that if you're going to use techniques like recurrent neural network or long-term LTSM models, right, you have to understand the data that you're feeding into the system. And you have to understand the degree of uncertainty in that information. So your data could be bad, you have to clean it. Yeah. Once you have cleaned it, there could still be a lot of uncertainty in data, and that also you have to quantify. Yeah.
Okay. Thank you so much, Dr. Shakti. So there is, once you mentioned about unstructured data and structured data, Randeep, Mr. Randeep, do you think that unstructured data for Facebook, Twitter, YouTube feeds, mobile data, as you were mentioning about the vehicles visiting the malls, companies who are more inclined towards unstructured data have an edge over companies who have structured data? During these COVID times, I feel, again, as a youngster or probably people who are working experienced professional, it is said that generally we devote a lot of time in structuring the unstructured data and probably carrying forward the discussion which probably was initiated by Dr. Shakti as well. That do you feel that the companies who do have that capacity or the capability to work on the unstructured data, they would be having an edge over companies who are having a structured data? Can you say that, or probably you have different views?
Yeah, no, so I think that's a good question. So I think the way I look at it, there are two parts to it, right? So today, as the analytics field has matured, the percentage of companies and probably the competition has gone up significantly, right? It's probably nearly everyone is using structured data in some form today, right? The unstructured data for a long time, maybe until about maybe 2-3 years ago, depending on the market again, a lot of companies are not even storing it. So I think today we have reached the stage, data lakes and the other things that, some of the other panelists spoke about. I think definitely a lot of companies have started storing the data, right? Now that they've stored the data, I think the lot of the models that are available from Google and Amazon and Microsoft, there's a lot of tools available to literally use that data that you're already storing and use it to make decisions fairly quickly, right? It's not really, again, it's not really, while it's called deep learning, and there's a lot of, obviously there's going to be an edge in, knowing the tools more better and knowing the algorithms better, but there are a lot of tools which are commoditizing this entire space, right? So I would definitely say there's a lot of unstructured data available, and some of it is in the data preparation piece, like in Facebook or Twitter or whatever, you might have to call the API, get the data. There's some work on that, but that's again all the standard code available which you can do that, right? So you will get the data fairly easily. You can apply that data to make some decisions fairly quickly, right? Whether it is analyzing the sentiment of your Facebook, Twitter feed, or analyzing the YouTube sort of reactions that are coming in, or analyzing a YouTube feed to see what that feed is about and then categorizing it, right? Or there's a lot of easy examples there. And obviously, there's the big thing is going to be the current, I guess, competitive edges on how a lot of these companies are using that data available and moving forward. Obviously, on the ultimate edge is where I think there are obviously the innovative companies looking at self-driving cars. In medical diagnosis is an area where there's a lot of innovation happening, right? So we have done some projects around agriculture as well, innovation in terms of maybe using cameras to detect pests on certain trees. We warn the farmer around it and stuff. A lot of the innovators, even from India, are coming back to the rural areas and then doing a lot of work in this space. So I think that's the trend. The tools are available, like somebody else said. It's more about that. And the last thing I would say is, I think the real edge is going to come from, because again, doing work on unstructured is again happening quite a lot and it's fairly easy, right? where you can combine the structured and the unstructured together. I think that is what is going to give companies an edge, right? Another example I can give you is, I think somebody else mentioned the claims, the insurance claims that are happening automatically, right? So if you do that, I think one recent example that I can tell. So I've been paying one particular insurance company in India for the last 10, 12 years, right? For my 2 cars and a bike, right? My dad's car and my car and a bike, right? Probably paid them quite a lot in premiums. But there was one small claim that happened last year, which is I think about 4,000-5,000 rupees. But their algorithm or some individual that went about it, went and denied it. I had to go and have a lot of this one. Very, very poor customer experience, right? But if you are able to use the analytics that tells you that okay, there might be some question on the claim, versus somebody actually also looking at the historical data of that customer and saying, okay, this customer has paid me like 100x that amount. Why should I deny this claim and create a poor customer experience for a valuable customer, right? So that is something that is, I think, a key. It's going to become a key competitive edge. How do you combine structured and unstructured to get an edge over your competition? Because everyone is doing unstructured analytics. At least the top players are doing it. Oh. That's the way I look at it.
Very right. Very right. Is something which I feel is the need of the hour as well, and with privacy and personalization, they both coming hand to hand. In the year 2020s, I feel that consumers are becoming more privacy conscious, and yet they are trying to demand more personalized data as well. With GDPR coming into picture, obviously the self-service is actually shaping the future of digital analytics by probably lowering the barrier of entry in the world of BA as well. And somehow I feel that moving on to the idea of advances in the AI and predictive analytics, we feel that there are going to be ramifications which are going. Now, organizations are actually, they will be facing some new challenges in terms of the skills implementations and much more, right? So how, Dr. Subra, how do you feel that the marketeers or probably they should be preparing for the change?
Well, see, the thing is that what is happening, I mean, that's my observation, or at least friends say. Probably people mix everything in the sense that, say, what is predictive analytics, what is, say, machine learning, or say AI. They mix a little bit this thing. What marketers, I approach a problem from a common sense point of view. What I want to achieve. If I want to achieve, say, for instance, customer experience that Ranjit was saying, then what sort of customer experience? Say, for instance, is it through a lead generation? Say, what happens in fintech companies? We generate leads. And after a certain point of time, say somebody uploads something and it doesn't go through. An example could be, say, a bank statement analyzer. I ensure that, okay, a bank statement, you upload it. I read through your bank statement. I analyze it and I evaluate your this thing, credit worthiness, and then only you go to the next stage and you give me your remaining documents. The guy is stuck at that point of time. If that is the thing, then see, the thing is that it's a flow. It's not analytics as such. Analytics, yes, a sort of AI goes behind in order to read through bank statement analyzer, or say comparing your faces, whether Subra applied image, whatever image Subra has given is matching with his government given identity card and all those things or not. So the technologies that goes behind is something that probably marketers need to understand a little bit. I mean, in order to understand it. And the automation that Ranjit spoke about, the robots, I mean, RPAs and all. Nowadays, you can go and everyone has implemented it, whether it's a Bajaj or a small company like Retra, you can go there and apply for a loan. It's like, what is your name? What is your phone? I mean, give me your phone. OTP would be there and somebody puts it, and the entire thing, the acquisition piece of it, entire thing is I mean, automated. The thing is that customer experience that Ranjit spoke about, in fact, if you call a popular, say, telecom service providers, you put those guys for some, say, 10 odd minutes, 15 odd minutes, that's where it goes for a toss. I mean, it's nothing to do with analytics or nothing to do with your AI ML. It's like the common sense probably is not prevailing, and then people go for it. Marketers, they need to understand what are different things. How do I mean, 10 years back also, people are doing predictive analytics. At that point of time, we used to call it predictive analytics. prescriptive analytics at that point of time was also there. The only thing that has gone up drastically is the computing power. If you look at now, the application of deep learning is more. Deep learning 10 years back was known as neural network, popularly. So the thing is that everything is there or was there. The computing power has gone up. I really do not think that marketeers doesn't understand this. Yes, they do understand it. It's just that they need to identify people who can implement the things for them. That's the only thing, only area that they need to understand a little bit probably better, or they understand it. I mean, people are pretty smart. I mean, people are obviously there has to be smart. Otherwise, how all the big companies are implementing all these new technologies? I personally think that people are doing well. I mean, everyone, even say Mark Vinny of the Salesforce guy, he is having a virtual assistant as one of his executive directors. So I mean, it's like things are happening. I mean, it's a very fascinating time to be in. People are doing really good.
Thank you so much, Dr. Subra. So one, I'm pretty much left with only one big question, and which is probably for one big question, which is for all the participants. But before we jump onto that one, Dr. Subra, one more question to you, and which is probably connecting, trying to connect the predictive analytics to forecasting, because I think this is one of the questions which was floated to us by the students, where they were trying to gauge in, okay, what are the parameters which are required for us, required by us for measuring how good a forecasting is in terms of the revenue forecasting, and what role size. So just looking forward for your thoughts on the same.
Sure. See, any forecasting. So before forecasting, I know the forecast, I have to fit a curve, right? I mean, anything to do with forecasting is a curve fitting. I need to know how to draw a curve. Simply, I need to draw a curve, whether it's a straight line, whether it's a curvature, whatever. I mean, you need to draw a line. Obviously, if you want to draw a line, then some equation comes into the picture. So how people do it, at least in revenue forecasting, on the past data. So there are two things that you need to do it. You need to divide your, say, whatever data available to you, say, into 70% or 30%, gap. Some people do a validation, because you develop normally a model in a particular data set and then you implement it in a remaining data set. Normally out of the sample, validation is better. So extreme validation is something, say, 90% you develop a model and then on 10% you implement it. You will take equal proportion also. Obviously, based on that data and the problem, it depends on which data you are going to develop a model and on which data you are going to test it. Once that part is done, then obviously you can forecast it. Forecast is fairly straightforward. How do you evaluate it? See, any forecasting evaluation happens on, say, actual data. What is the actual data set? When I fitted a line, what my fitted line is giving me a parameter, and what is the deviation? So deviation, if you look at the revenue deviation, mean absolute deviation is the thing that people use, which is more or less widely used, but probably not the best thing to do. Right. You have a actual observation, you have a predicted observation, you take a deviation, you take the absolute this thing, and you take average. So that's how it is calculated. The other thing that is more popular, because this mean absolute deviation is prone to extreme value fluctuation. So people go for percentage deviation. Another thing is that percentage, what is the percentage variation? And the third piece, which is probably more utilized, is the square root, mean square root of this thing. So you take the deviation, you square it, and then you take an average just to minimize it. So these are the three things that people normally use it. At the end of the day, it again depends on the problem. If you are forecasting just one figure, obviously absolute deviation comes into the picture. If you are forecasting for multiple, a time series sort of a forecast, obviously, you need to look at all these, different measures. So that's how people do it.
Okay. Thank you so much for your kind words. So I think this pretty much sums up what we had planned for today. Last question to all the panelists, probably a quick one as well. These are all exciting bunch of students who are willing to go forward, who are willing to learn. They are putting a lot of hard work to bring us all to the platform, and they would be needing your guidance. How should they plan their future, probably if they want to enter the analytics domain? A quick one from all of you. Mr. Randeep, can you please go first?
Sure. So I think that's a very good question. So I typically get about, on average, about 20, 25 messages in emails per week, right? So especially I think since I've done a couple of these sessions, I think it's gone up a lot more. So the one input I will give for sure is when you are reaching out to companies, people, do differentiate, right? So you need to differentiate. So like I said, one of the things I think people have spoken about it before, and even I mentioned, is there are a lot of tools widely available, whether you're talking about BI tools, whether you're talking about R or Python to do machine learning, and a lot of open source code sets available. There's Kaggle available for you to actually work on competitions. So do a lot of work, right? So do work on examples that will give you a better understanding. It will give you confidence in entering an organization, and you'll be better prepared to, obviously, if you talk about that when you reach out to someone like me, you will get an edge compared to the 20 others who are just going to talk about the 2 academic projects that they did in their course, right? So do a lot of that work for sure, right? So, and then, like I said in the very beginning, this is a big opportunity. Build your world understanding, right? So because I think, like the other panelists mentioned, business is a key aspect of it. So build a world understanding, and I think in general problem represented. It is while business knowledge is important, it's also important how you're structuring it, because AutoML is made this and processing power is the other thing, right? Big data, compute and stuff is so widely prevalent today that the biggest differentiator is going to be how well you know your business, how are you going to structure your problem, and how are you going to solve it in terms of what data sets are you going to bring in and stuff, right? So build your world understanding, speak to people, attend some of these events, read about industry use cases, so that you are able to say, okay, this is how company A did this, or this is how company B did this. And while this is relevant for students, I actually tell this to all my employees as well, right? So build a world understanding, spend time outside of work, read up on this one. That's what will lead you to becoming a better data analyst and data scientist, right? So data science is not just about about statistics and machine learning. It is about getting a holistic view of the business and being able to make decisions, right? So that's the way I would put it.
Thank you so much, Mr. Sandeep. So I was talking to Dr. Shakti before a day before yesterday, and he very rightly quoted that, he said that I can go on for a long time to talk about what is needed to be there. But a quick one from you, sir. So for people who are actually looking up to you, some word food for thought as well.
Sure, Warren. So one thing I mentioned earlier is that data science, the entire field of data science, data analytics, business intelligence, business analytics, it has now evolved into an ecosystem. So identify an area that you may want to specialize in. Do you want to be a tool expert? Do you want to be a machine learning algorithm expert? If you want to be, do you really love math? Do you love numbers? All these are like, there is a lot of enthusiasm around machine learning, but you have to see, do you really like it? Do you understand what XGBoost is? You have to know the internals of machine learning before you should even go into that. Then the other thing is, then there are a lot of other technologies that are coming up, big data technologies, for instance. So would you like to learn Cloudera, how Amazon Redshift, all these are in the big data space. How does Hadoop, HDFS actually works? So maybe you may want to become a specialist there. Then as far as the business is concerned, you will learn business as you go along. But yes, so one thing, if it's a fresher that I'm interviewing, the one thing that I ask for is, has the person studied the course that he or she enrolled in? If you are coming from Department of Financial Studies for machine learning, I may ask you a question, what is Black-Scholes model? How do you measure volatility? How do you calculate the book value of a company? It may have nothing to do, right, with the work that you are going to do, but at least I want to know that how aware you are, how serious you are about your work. And also, like if you plan to go to US or outside India, and if you ever want to do a contracting job, and I used to do that a lot. So over there, a lot of companies look for tool experts, right? And you'll be working on an hourly rate. And the hourly rate depends on how new the technology is, how popular the tool is and how many people are there in that, who know about that tool. So when SAP came out back in 2000, the hourly consulting rate for it used to be $400 to $500 an hour. Now it has become a commodity skill, and that same rate has gone down to $70, right? So these are a few things that you may want to also like look into as to what is it that you want to specialize in and where is it that you want to work. Okay, all right.
Thank you so much for the kind words, Dr. Shakti. With this, we now move on to Dr. Shubhra. Sir, some good words from your, some knowledge which the students will take away from the session.
I'll borrow from Shakti, and I would like to believe that since you people have done masters in this particular subject, stick to it if you like it. Some 10% obviously will not, may not like it. Even if you study masters, but there are people who would like to, explore some other things. But if you like it, stick to it. And then the thing is that how you can utilize different tools and technologies in order to enhance or rather, do a better job in your particular this thing. So that's how things normally work. As Shakti was saying, machine learning, probably the kind of work you do may or may not require even. So that's how I would put it. And yes, learn, study as much as possible, even if it's not in your field, as Randhiri was saying, that study. If you study, you will learn more. That's as simple as that. But I wish you all the very best. You people come from a premium institute, and obviously everyone will do very well, as the other person, in the other group was saying that you are future of the finance in the country. So, no need to be bogged down by tools or technologies. You need to know what you are doing, and then tools and technologies is a enabler to solve the problem. So those things you people will learn as and when it comes.
Thank you so much, Dr. Shubhra. So with this, probably I would add one more point. So life isn't necessarily about everything before it happens. It is essentially, for me, it has been knowing how to react when life happens. So with this, I would close everything from this panel. Over to the organizers. So feel free to put down some questions for us. We do have some questions where can we expect analytics to be embedded in uncharted areas in future? Which uncharted area will adopt analytics in near future? So that is a question which has now come up from Nishant sir. Anyone who would want to take it from?
Yeah, no, so I'll take that. So I think, like I said, I don't think there are any uncharted areas, right? So it's kind of become, maybe if you had asked this question a few years back, but I probably had a few examples. Today, in the sense that there are a few areas where I think things are just getting started. There are probably 2-3 companies, like I mentioned, the agriculture area. Agriculture is as an area. There's a few things happening where there's data collection happening using IoT. There's still not enough analytics happening on top of it. Right? But even there are examples, but it's probably not as widely prevalent as it is today, maybe in retail or business. Yes. Uncharted areas, I would say, as per my perspective, there's almost every area you go to, maybe the NGO sector that I think somebody was talking about in the previous session, right? So maybe in NGOs, there's not that much happening. It's more sophistication kind of thing. But I would say in commercial areas, there's almost analytics is there in every area. The sophistication of analytics might be different. Maybe some people are still doing BI and a little bit of standard regression models and forecasting and stuff like that. Maybe the unstructured and the deep learning and all of that is probably not there, widely relevant in some sectors and function areas. But I don't think there's anything uncharted in my view. Okay. I'm open to hearing other opinions, but in my view, I can't think of anything uncharted.
Okay. Thank you so much. Thank you. So there's one more question which has come up, which is probably related to text mining for sentiment analysis. I think, so when I was working with, in my past role with RBS, I was given a task of identifying the sentiment of the customers who were using the application, and based on the feedback they had given, and they had, the fields had some very interesting variables called net promoter score. So we never thought that, that was a learning experience for us, that a blank does not always mean that we do not have a data. We can't really use a missing value imputation over there and fill the data over there. So can you say that, okay, text mining and probably the alternative data sets which are basically coming up, are they going to be very useful, or will it be useful for the company? How does this emergence of alternate data will make an impact on the market efficiency?
Okay, so I actually worked in that area. So there are two parts to this question. One is about sentiment analysis, and the other one is on alternative data sets. As far as sentiment analysis is concerned, we recently did a lot of work in this area and doing the sentiment analysis on Twitter in the travel space, because obviously the travel was one of the hardest hit industries, and we wanted to know what people are saying, what they are thinking. So we have done a lot of sentiment analysis. There are APIs from AWS, from Google, that you can integrate, using which you can understand the sentiment in text. So all you have to do is to pull that text from Twitter, and then you send the text over to, over to this API. It will give you the sentiment. The other way, it is, a lot of this is also done in the call center. All the voice calls are recorded, then they are transcribed to text. And again, you use an AWS API. And once the text is there, you can do the sentiment analysis as to whether it was positive or negative. So Amazon has done a lot of work in billions of text and messages, and they continuously do so. And all this is basically part of NLP. And this is the system that they have developed on which Alexa is based, right? So a lot of sentiment analysis is done, but still not accurate. If you ask Alexa some questions, if I say, Alexa, play old Hindi songs, it will never do that, And so I'm like, it simply doesn't understand it. So there are gaps there. And I don't think billions of messages analyzed would be sufficient. You need probably trillions or probably a lot more than that. And I think that this would be built over time. Yeah. As far as the alternative data sets are concerned, especially in the hedge fund industry. Hedge fund industry is this secretive industry which gives you like high returns. And they're always after information that is not common and public information. But you see, once the information becomes common, if you're using alternative data sets, and once the information becomes common, then you no longer have any advantage over it. But if you are an early adopter of this information, then you are in an advantageous position. So see, when it comes to predictive analytics, whether you use regular data sets, alternative data sets, one thing you have to remember is that something that can be predicted, if it has been predicted, it is no longer predictable. Yeah. Okay. So what that means is that if you know what your future is, and if you're going to make changes in the present, then you change the future, right? So no matter what information you have, alternative data sets, if you've got satellite images of car parks, if you've got foot traffic in like retail shops, or if someone is searching for a particular disease on Google, right? Everyone has that information now. If you have everyone has that information, then you've gone back again into an efficient market. If you are in an efficient market, then you no longer can predict the stock price, and you are with everyone. So I hope that answers that question.
Yep. Thank you so much, Dr. Shakti, on the same. So I think with this, I hand it over to the organizers. So finally, after a pause, I think for the questions, I think it is back to the organizers. So thank you everyone for your time. Thank you so much, the panelists. Thank you so much for your time.
Thank you, sir. It was
Thank you. Thanks a lot.
Thank you, sir. It was a very enticing discussion. I'm pretty sure members had a great time listening to the expert opinion on the topic of future of business analytics. Now, I would like to thank the expert panel and the moderator for providing such a great insights. Now, let's part for a lunch break and again meet at 2 p.m. I hope to see all of you with the same energy and enthusiasm you have shown since morning. Once again, thank you, everyone, and enjoy your meal.
Thank you. Thank you all.
Bye-bye.
Bye.
Thank you all. Bye.